Good morning, and good afternoon, and good evening. I'd like to welcome you to our TopstepTV for opening call. And congratulations once again. You're at the right place at the right time. And yes, today is Friday. Gotta love that. We have an exciting, informative, and educational programming for you today throughout the week. And as of today, Friday, we will be your trading buddy, your trading mentor, your newscaster, fellow trader, and even that guy on YouTube that shows that it's so happy it's Friday. Nice. So get yourself ready for some top-notch, up-to-date market trading knowledge with John Hoagland. Good morning, Jonathan.
Good morning, Eddie. Happy Friday, end of the month, end of the quarter. Welcome to our Team Topstep, our futures family. It's good to see everybody. It is Capital Preservation Friday. I'm looking forward to having an interesting and fun trading day. We try to have a little bit of fun here on Fridays. We do have a special guest with Michael being out today. I know we'll all miss Michael today, but we've got a wonderful special guest. I just did an interview with her about 9 days ago on Power Players. Deeyana Angelo is going to be with us for Fast Markets today. I'm very excited about this. It's going to be a lot of fun.
It's going to be some fun. I'm looking forward to that one. And it's very nice for her to come joining us today on Topstep TV. But let's dig in. And end of the week news here. U.S. stock futures pointed higher today, suggesting an extension of gains made from yesterday, although the equities are still on track to slump. Negative September, as John was mentioning. Dow futures were up 0.5%, S&P futures up 0.5%, and the NASDAQ up 0.7%. Indices green yesterday. That was because the tech-heavy NASDAQ composite outperformed. It did climb 0.8%. And stocks were supported by a pullback in the U.S. Treasury yields from a 16-year high. So heading into the final day of the month, yes, that is today, NASDAQ and the benchmark S&P are on course to slip to the worst months so far this year. 30 stock Dow Jones Industrial Average is on a pace to decline by 3%. John, what do you got today?
Well, it's, kind of important day as far as economic numbers are concerned, and markets have taken everything in stride as pretty much everything has come out pretty close to what was expected. Starting with the international trade balance, we were looking for an output of 91.2 billion. We didn't do that. We did less than that, which is a good thing. We're only 84.2 billion in outlays as far as international trade is concerned. Now, the PCE numbers we've been waiting for really all week. This is an important number. The talking Feds and the entire Fed will be, checking out this information for what they're going to be doing as far as rates are concerned into the future. They're looking at a lot of things, but this seems to be one of their favorites. So the core PCE month over month for August was 0.2%. Sorry about that. They were looking for 0.2%. It actually came out 0.1% lower. So that, I think, should be kind of viewed as potentially good news as far as inflation is concerned. The core year over year for August, they were looking for 3.9%, and that's exactly where it came out. Now, the core is without food and energy. The PCE overall, they were looking for the month over month for August, 0.5%. Again, 0.1% lower. So perhaps a little bit of easing of inflation in these numbers. The PCE year over year for August, they were looking for 3.5, and that's exactly where it came out. So no major surprises from the PCE numbers. I think the markets, of course, are taking that in stride. No major knee-jerk reactions, anything like that here this morning. At 8:45, we got the Chicago PMI numbers coming out, and then 9 o'clock, the University of Michigan sentiment is due out, and that's going to do it for the week. Again, don't forget, ladies and gentlemen, it is the end of the month and the end of the quarter, whatever that means to your trading. Just keep that in mind. Eddie, what else you got?
Well, crude traders, oil prices a little choppy today, remaining on the course of about a 2% increase for the week. That was because the supply tightness in the U.S. and hopes for a bump up in demand. China, because if you're in China, you can have fun this week. It's Golden Week holiday, so prices have surged 30% the last quarter. That's the highest level in 2023, and that's thanks to our friends in Saudi Arabia and Russia. So we'll see that. But
couple other things that we do want to mention, Eddie, is the UAW strike, the auto worker strike, is possibly expanding. I don't know if you were going to jump on that right there. I'm sorry if I jumped on you there. What else you got?
No, that's fine. We're here for the news.
Right, well, one other thing is the government shutdown. There is, murmurs of them being able to come to some sort of stopgap agreement, perhaps today, perhaps over the weekend. But that is also a something looming in the markets as well. Taking a look at some of the individual stocks that are at risk. These stocks are, very directed to government exposure as far as market cap basis. Pfizer, Accenture, RTX, Honeywell, Boeing, Lockheed Martin, General Electric, CVS Health, Northrop Grumman, and General Dynamics. A lot of the defense contractors probably going to largely be affected if there is a government shutdown. So keep your eyes open for that as well.
And we're going to get to charts here in just a second here, but sad news for you Harry Potter fans. Harry Potter's Dumbledore has died at the age of 82. Harry Potter actor Michael Gambon passed away after a bout of pneumonia. For those that have been getting the DVDs from Netflix, well, it's a bittersweet day for Netflix. Streaming service mails out the last DVDs to its subscribers who can keep them. Oh, man, did I miss out on that one? Son of a bitch.
Yeah, you can just keep those now. You can just keep them. We're done with that.
It's more of a pain. Also, did you hear about this one, John? The Packers lost.
I did hear about that.
I did too.
My heart is broken.
My heart is broken. Be still, my beating heart. Sorry about that.
A friend of mine left a couple of Bears tickets on his dashboard. Somebody broke into his car and left 4 more Bears tickets on
Did
his
they
dashboard.
really? That's funny stuff. Funny stuff. Hey, it's Friday, ladies and gentlemen. It is Friday. Oh, yeah. Oh, yeah. Let's get the energy up here. All right. So I'm really looking forward to Deeyana coming on with us. Oh, that's going to be so fun. And let's get to the charts here. But folks, remember, checklist, game plan. It's Friday. If you're going to trade today, make sure you've got those going on. So, all right, Johnny.
All right, the VIX a little bit lower this morning, 16.3. It hasn't been a major factor in anything. I just like to mention, with equities moving a little bit higher, of course, the VIX is going to creep a little bit lower. So, S&Ps. What have we been talking about all week? We've been talking about the idea that the downside auction has not been performing well. We mentioned yesterday, be aware of some potential profit taking. Be aware that we left that excess at the low on Wednesday. We may be headed for a move in the opposite direction, which is exactly what happened. How good is the move in the opposite direction doing? Well, we added some volume yesterday on a push to the upside, but we lost 13,000 in open interest. So to me, this so far is looking more like a potential bear flag than an absolute reversal in direction. Of course, we don't know this. Anything can happen. And it's Friday. We're going to be managing risk and protecting capital today. So a new upside auction has begun. We'll be monitoring to see how good of a job it does. We mentioned the excess again on Wednesday. We mentioned potential profit taking, a potential move in the opposite direction. Maybe we got a little bit too short at that low and short time frame, and we're seeing a move back to the upside. Volume rose again. Open interest indicates what we expected yesterday: a short covering rally, a short covering profit taking. That's, I think, what happened yesterday, and it is supported by that loss in open interest. So far, the upside auction that has begun, I'm giving kind of a C. I don't have that much information about it here just yet, so we're going to look at this as kind of an average upside auction. Moving into the 30-minute chart now. So there's our excess on Wednesday. We had, I know somebody noticed in the chat yesterday, we had an inverse head and shoulders. Well, that inverse head and shoulders broke out above the trend, the neckline here, and from the shoulder here, we kind of finished that upside move. But if we go from about an approximate neckline, there may be more continuation to the upside to complete this head and shoulders formation. Overnight inventory is long. Looks like we're going to be opening with a gap. Apparently the market liked those PCE numbers opening with a gap. There's a naked point of control right where we are now. And again, a completion of the inverse head and shoulders brings us up to right around 43.90. So we'll see how things play out today. As far as the profile yesterday is concerned, it's a normal variation, neutral day with excess on the low and a low excess high. The low excess high indicates an unfinished upside auction. Well, the auction is continuing to the upside, at least for now. So again, we've gone from looking for opportunities to sell strength to potential opportunities to buy weakness. Take a look at the NASDAQ now, Eddie.
Right.
NASDAQ,
Daily, baby.
Yep, NASDAQ daily. We took us to our weekly kickoff low and rejected. Again, excess low. Auctions end in excess. The market gets too cheap. Sellers back off. Buyers take over. Price moves quickly off the low, and that's what we saw on Wednesday here as well. And it didn't hurt that it was up against the weekly kickoff low as well. So that weak downside auction we've been watching has ended, and a new upside auction has begun. How is it doing? Volume was higher yesterday. There was a 1,300 contract increase in open interest, so there was probably some new longs meeting short covering yesterday on this push to the upside in the NASDAQ, and it looks like we are going to be continuing this brand new upside auction today. The upside auction, however, with the seed grade on the S&Ps, we're giving the NASDAQ a C plus because we did increase open interest on the way up. All right. That weekly kickoff low and that excess at that low, pretty tasty little area there. So take a look now at the 30-minute chart.
What is it, that kickoff low there?
14,610. The low on Wednesday.
Thanks,
got pretty deep into that zone. The low on Wednesday was 14,586. So we got 14 points through that. That's, I think, enough to keep Michael in a trade with a 15-point stop right at weekly kickoff low. I didn't think about that, but we are not going to be able to do that now because we've got this market with overnight inventory to the long side with a gap to the upside. Gap rules in play. The gap rules state if we cannot close the gap relatively early, I understand that's a very subjective term, we look for opportunities in the direction of the gap. We've got weekly kickoff high above. We are at, well, we kind of tested this naked point of control here. I'll take that off by the close yesterday. So there is space above. There is a gap to fill above. There is some weaker structure above for this market to go back up and target. So again, going from looking for opportunities to sell strength to opportunities to buy weakness seems to be in play today. That's not really going to break until we start getting close to or taking out this weekly kickoff low, and in the S&Ps anywhere near that low on Wednesday would break the potential for a continuation move higher. The PCE numbers, there was no bad news there. And when there's no bad news, what do the equities tend to do? They tend to grind higher. Here is crude oil. So we had, pretty decent up move on Wednesday. Thursday, we came off of that. We took some profits yesterday. We know it's the end of the month, end of the quarter. We had lower volume on the pullback. We lost 8,700 in open interest. So we can kind of attribute that more to just some profit taking before the end of the month, end of the quarter, and the end of the week than anything else. We've got our weekly kickoff low, kind of supportive in the overnight session. The market is now open, and our friend Deeyana, he's a crude trader. We may get a much bigger look at crude oil today than the NASDAQ or the S&Ps, because we do have Deeyana with us. So we're looking forward to seeing what we've got going on in crude. So weekly high, again, supportive. It's going to be somewhat pivotal for us today. Take a look at the 30.
For those that are wondering, that watermark is going to tell you what product and what time frame. There's the 30 right there.
There's the 30. So yeah, that was the daily chart. Now we're on to the 30-minute chart. So overnight inventory, we were pretty long here. We tested to the point of control from yesterday. When the market opened, our overnight longs didn't find what they were looking for, and that was continuation of buying coming into the market. What we're seeing now, this pullback, to me, is initially created by overnight longs saying, hey, we're not going to make any more money on this. Let's get out, and they get out en masse. So as we get back into into the settlement, or where the market opened last night, which was right here, basically, weekly kickoff low, settlement. What didn't happen yesterday? We had a down day. We had a kind of a double distribution trend day, right? So we have a distribution of time and volume here on the highs. The market broke and then started to accumulate volume here. But what didn't happen was we weren't able to come down and close this gap, at least not yet. We mentioned yesterday there are some visuals down below, some weaker structure. It goes back further than this, of course, but in reasonable price range of today, this gap close still remains something that would be possible. So the market opened in range and in value. That usually tells me I need to be patient, wait for better trade locations as the day goes on. We've got, I think probably the opening range relatively close to the high of the session today, but this is short time frame, overnight longs, just getting out of those positions because they're all long and they're not getting what they're looking for on the open. So we're getting a pullback. If you're looking for opportunities for longs, this is giving you an opportunity for better trade location. So again, the fact that we weren't able to fill the gap yesterday leads me to believe that there's still an inherent strength to this market. Fundamentally, there seems to be an overwhelming strength to this market. So I'm still looking for opportunities to buy weakness in this market. Let's take a look at gold now. Eddie, this is your daily product here.
Yeah, a little rising from the ashes here, sort of, kind of. Getting back to where we were earlier.
Yeah, I want to go buy one of those gold bars from Costco if they ever come back in stock. A lot of folks buying physical gold, not necessarily showing in the futures markets here. Volume did maintain on the way down, but we lost 2,800 in open interest. We lost open interest on the previous day. This break to the downside, because of that, is feeling a little bit hollow. It's not like we're bringing new sellers into the market. We're taking out old longs. I'm giving this downside breakout and continuation again another C minus. I can't put my heart around giving it a D. So it's C minus. So with the loss of open interest, the stable volume, where are the sellers? Where are they? They don't seem to be barreling into this market to the downside. Watch the dollar. The dollar's actually back down below 106 today. Last I checked, it was 105.88. We probably maybe have some shorts in this market that are maybe thinking about getting a little bit, taking some of these profits at these levels. I mean, this is relatively cheap comparatively. When's the last time we were down here? March. It's the last time we were down at these levels. So the auction to the downside, not performing exceedingly well, getting a C- grade from old Hoag here. So
sounds like a buffet. Honey, let's go eat at the old Hoag.
The old Hoag buffet.
The old Hoag buffet on 32nd Street, you know?
All right. Overnight longs. Long liquidation, a double distribution, trend day to the downside, excess on the low, excess on the high. Really, the market kind of opened in an area of repair. It has repaired the point of control from this upper distribution. If it continues higher, look at all the visuals that are available for this market. All the weak structure on the way down. Naked point of control, gap. Naked point of control, weekly kickoff, gap, naked point of control. We got to go way back to find any visuals, and I'm sure that they're there. But I think that the retail trading, gold eating public is more focused on finding levels above, and if that's what they're looking for, that's where the market is likely to go. So we are, kind of open in range and in value. We're attempting to continue to move higher. We have excess on the 30-minute at the low. No real excess on the daily at the low. Some degree of it. Very little information down below, but there is a lot of space down below for continuation. The pullback from this low here was very violent and emotional. So if we do continue lower, there is a lot of space, just as a caveat. But again, the overall health of this downside breakout, while it looks big and scary, I'm kind of questioning how much there is left to it.
It's scary.
Scary. Does look scary, doesn't it? I mean, we were talking for weeks about when this market breaks out of this, go with it, which was certainly the right thing to do. Downside. Right. But now, we're kind of looking at a market that seems to be aging, I guess, in the 3-day downside auction, and wondering if we're going to see some sort of a pullback. And that you got to keep in mind, it's the last day of the month, last day of the quarter.
Yes, last day.
And then we'll see. Right?
Last day of the week, Friday. Yep. Last day of the month, last day of the quarter, last day that Netflix people are getting their DVDs. And it was the last day a couple days ago for Dumbledore. Too soon? But, John, just a reminder, we got a little time here.
Already.
Pardon me?
It's not Dumbledore.
It's what is it?
It's Dumbledore. No F.
Well, you know what? I had an F laying around, so I just threw it on the back of his name. Dumbledore. I'm thinking of Tim Conway.
You're gonna get the wizard army against us. That is all.
The wizard army. There's a wizard army. You know what? And I wonder if they're Packer fans. Did you notice that Fred came in a little late today?
I haven't been watching. Is he here?
Fred's here, and he probably was couldn't get to sleep last night because of them Packers, right, Fred?
Well, I hope he was here for my joke about the Bears too.
That was a good joke.
You can't laugh at yourself. What are you doing? Right?
I'll laugh at you. You laugh at me, and then we'll both laugh together. Fred says, "Was there a football game last night? Oh my goodness, how quickly!"
Shaw says that it was the F that the gold market should have gotten. See, Shaw got kind of the same idea that this downside auction isn't performing well, so we'll give Dumbledore's F to gold.
Okay. All right, there it is. Oh, it is time here. All right, so I am looking forward here to saying we'll be right back for Fast Market and our special guest. We will be right back. As promised, we have returned. Yes, we have. And we were waiting for Deeyana to join us here right now. But, John, what are your thoughts today? I mean, what are you looking at today here in the ES?
Well, we are opening out of balance from yesterday, so there may be an earlier opportunity. That's what that means to me, is opening out of balance. We may see good trade location occur earlier in the session. I know Deeyana is coming from London. She may be stuck in the tube or somewhere lost in the fog or something. I know she will be here. We're looking forward to seeing her here. And so, as we get close to the open here, there, like I said, there may be an early opportunity. We're out of balance. We're looking at overnight inventory to the long side. So there may be an opportunity in the opening range. We may not take it. We'll see what happens here.
Okay.
Oh, Deeyana is saying that she's still waiting for the link to join.
Tisk, Anthony. I will send that to you, Hoag. Well, you have it.
Right.
So just send it over.
Shame. Oh, the shame.
Yeah, we are sorry about that, Deeyana. We will get that to you directly.
Thanks, Dan Trader. Blackhawks win 2-1 over St. Louis in the first preseason game. And it is 8:29. Get your ponies in the box. And that is not code for anything else but getting your horses in the gates. All right. It's got about inside a minute here for the market to crack open like an egg. They're Friday trades. My goodness.
All right. Here's her email. We want to send her the login information. We are sorry about that, Deeyana. We're looking forward to having you with us. All right, we are coming into the open. Well, let's watch.
What's the bust? Tell me what's happening. What's the buzz?
Buzz, right? Right.
And they're off.
They're
There we
off.
go.
So we'll just see what happens here on the opening range.
Yeah, just sitting on those
NASDAQ's
dailies.
21, 22 point opening range, 22 handle opening range, 2.5 points in the S&Ps. Remember, we've got some overnight inventory to the long side. If they're not finding what they're looking for right away, they could head the other direction, which would give us better trade location if we are of the frame of mind of looking for longs. And usually I'm looking for longs in all the wrong places. Got a $5 opening range now in the S&Ps. Delta down near a negative 1,000. So this is short time frame traders already peeling off some of that overnight inventory. We've got a 6.5 point opening range in the S&Ps now, which just serves to increase risk. I'm going to just kind of take a preemptive look to the downside here because we're seeing some pretty decent negative delta here. Shorter time frame traders, we still have not taken out the low of the opening range, so this trade is a little bit preemptive.
I like the little head fake we had here right on the open in the ES. You know, make a new high here early, just barely, and let's sell. Let's sell. I'm sorry, Mr. Toe, I woke your dog up with the bell.
Right.
Your dog's like, what the hell was that? Jesus Christ. Dinner time, honey. All right. Yes, Caesar, thank you. 8:45. We've got something cooking. 8:45. I appreciate that. 13 minutes, Chicago PMI.
Opening range was broken to the downside in the NASDAQ. We just took out the low of the opening range in the S&Ps. I am not looking for this market. I'm not looking for this trade to be an all-day sucker. I'm looking for this market to just take out some of the overnight inventory. Not going to stay in it for very long. And I really don't want it to get too much into my pocket. So 67 is where I'm going to put the stop for it for the time being. We're basically sitting here at break even. Market has looked lower. If it doesn't find some legs to the downside, I don't want to risk a lot on this trade. And again, we don't want to stay in this trade for a very long time because again, this is short time inventory adjustment. I mean, this adjustment could take us all the way back down near settlement, which would be a pretty substantial move. I am currently short at 43.65 quarter. Short one, 43.65 quarter. The low of the opening range, which I beat, was 64 even. So I kind of preempted the breakout of the opening range to the downside. We saw some pretty good negative delta. Now we're seeing positive delta, and we're holding at the lows. So there may be a little bit more than just overnight inventory adjustment in this move.
Looking at crude,
plays out.
Looking at crude real quick here, Johnny. We're approaching settlement here, 91.71, which sort of kept the market, intact here most of this morning. And it was obviously we saw the little rally here, but pulling back down here at around 91.71. Watching that.
And we're having trouble sending this link to Deeyana. Deeyana, I just sent it. So you should have it very shortly, and then we'll get you in here.
Question from R3K Tum. I said it that way because I wasn't going to say it the other way. Eddie, could I decrease my daily loss limit? I'm not sure what you mean by that, but
well, that's R3. That is something that if you were in a funded account, you'd have to contact the risk department on that.
Yeah.
But if you're in the trading combine, we're not going to be adjusting daily loss limits in the trading combine.
Check. Silly person. Yes, MP is not here today. He's not clicking a mouse. He's rolling bones out in Vegas. All right.
Yes. Yeah,
Crude
he's
moving
doing a different
past.
type of risk management today in Vegas.
Yeah, R3 is an XFA. Yeah, contact our risk department, and they will adjust it.
So here we are hanging around. The NASDAQ has really come off the regular trading hour session low here. We're back to positive delta.
I think we have Deeyana here too.
Excellent.
No, you're kidding me.
Yeah. Deeyana, do you mind if I throw you right into this? Okay.
Well, toss her nicely. It's Friday.
Well, I'm excited to have Deeyana here. We're probably going to get a much better look at crude oil. Good morning, Deeyana. Sorry about that. And we're
Hey, long time no see.
Yes. Hello, Eddie. How are you doing?
I am doing fine. I am excited that you're here with us today, and I really appreciate you stepping up, having some fun with us.
Thank you. Thank you. Yeah, so I'm stepping in for Michael today. I actually have my Topstep swag as well.
There you go.
There it is.
I actually bring this on dog walks all the time. So, yeah.
It's very handy. You get
Oh,
more
it
that
is,
fits in
yeah.
your pocket or your purse.
It's great. Yeah.
Fanny pack
absolutely.
is a wonderful thing.
I love a fanny pack. I'm a child of the 80s. Fanny packs all the way.
Right on, right on, right on.
We thought maybe you were stuck in the loo or you didn't mind the gap today.
Yes. Didn't mind the gap. Yeah, exactly. Right. Well, yeah, I'm looking at crude oil, Hoag, as you
Let's take a look.
correctly pointed out. Yeah, quite a big jump for initial balance, but usually, it could be the end of the month as well, having some effect on the prices. We are coming into some areas of overnight demand on larger time frames. So I'm looking at a 4-hour chart here. So in my experience, whenever the initial balance is pretty large, it rarely turns into a good trending day. Like, not, it's not impossible, but it's a little bit more improbable. So I would actually be looking to fade crude to the upside at some point. We also had the open inside yesterday's value. So again, that could indicate some responsive activity as well. So for now, I'm just waiting. I want to wait and see a little bit later. I don't really like trading during the initial balance anyway.
Right.
So you know me, I like to wait and pounce once my levels are there. And there is one level, so we'll see.
So here's the 4-hour chart that Deeyana's taking a look at and looking at a possible demand area here.
That's right.
And you, by saying fading, you're looking to look for an opportunity for a long.
Yeah.
Right.
And that's purely because of the size of the initial balance that we're having. Like, it's jumping off a cliff. And anytime you have a responsive activity, if you get a move outside of the value, assuming the open inside value from yesterday, they do want to bring it back to the value area. So I also look at all of this as sort of an attempt at getting it back into some sort of a range. We still have a lot of stuff happening on the long side in crude oil. So any kind of shorts I would be a little bit careful with.
A little bit cautious.
Yeah.
Hey, Deeyana, 2E Trader's asking, what do you consider the initial balance on crude?
I consider start time from 8 a.m. CST till 9 a.m. So that first hour of NYMEX, former NYMEX.
Okay. Yeah, initial balances are typically the first hour of the regular trading hour session.
Yeah.
So we
And those regular trading hours are always based on the former open outcry hours. So you need to know those, obviously.
Right. Yep. Very good.
I know Hoag knows them.
Yes. I've been taking trains downtown at 6 o'clock in the morning for 30 years. We did have some overnight inventory that was to the long side here, Deeyana. I mean, this is a pretty good pretty good dive from that overnight inventory. Just going to go back to the S&Ps here. We were holding a position. I think we're still in it, at least for now, which basically is based on the overnight inventory. I'm short here at right here, 43.65. We had a little bit of a push to the downside. I don't have a lot of risk on this trade, Deanna. I don't want the market to really come back too deeply into the opening range for this. So, and I'm not.
There's a fixed daily range there, because I have my average daily ranges are pretty good levels, and every time I have a fixed daily range, which is calculated for sort of from GMT midnight, I take the average daily range divided by 2, and then I put half of it above the open and half of it below the open. Whenever we get an open outside of value and around that fixed daily range, there's a very good chance of it going back to value. So I'm basically combining it with the original Dalton rules. So here we did have that open right at right near 43.67.50,
which is that fixed daily range.
Yeah. I call it the 0.5 DR.
So where would you put a profit target for this short?
I personally would put it either coming into 43.56, and if that doesn't give a significant bounce, then all the way to value high, which is around 43.51. But we'll see. We still have VWAP here as well. So if it can't break 43.61, then it's probably going to go higher up.
And where's your VWAP showing at?
My one is showing at 43.60, so literally just touching it now.
Okay.
Where's yours?
This one is showing at 43.56.
Okay, so let me just change my settings a little bit, because I do have it from London, because I do trade that during London.
This one's anchored at the open at 5 o'clock last night here. So
okay.
Real quick here. We've got about
5 minutes remaining.
5 minutes here on our Chicago PMI. PMI coming out here at 8:45 Chicago time. And Deanna, while you're doing that, we've got a lot of people going, "Wow, who is she? Who is that? That's not Michael. That is Deanna. Who are you?"
I'm Michael. Really, I look a bit better.
It's a filter that we purchased.
It is a filter. It's a very good filter. Yeah. I think it's pretty. So I'm a former funded trader from Topstep. So I have been with Topstep since, oh God, I don't know, 2016, 2017, something like that. So it's been a while since then. Since then I've gone to do my own thing, and over the years I've remained a prop trader. I've worked for several companies, and I still trade prop money as well as my own. But the biggest thing that I'm doing at the moment is the educational courses through Market Stalkers. I have my own YouTube channel, which you can check out, called Market Stalkers. And the reason why it's called Market Stalkers, thank you, Eddie. The reason why it's called Market Stalkers is because it's a community of people who want to learn how to trade like prop traders. Because when you're trying to do trading, that's one thing, but if you want to do this professionally, if you want to do this to a certain standard, that's a whole different set of skills. So that's what I do. So if that's what you want, you can check out our educational courses as well. I'm the main instructor there, but I'm an active trader. I love trading. It's my huge passion. I used to be a musician, session musician, and that was pretty successful as well. And then I went into futures trading and never looked back. So here we are.
So if you didn't see the interview, it was on the 20th of September. Did an hour.
Yeah, it was last Wednesday. Last Wednesday. That was a good one.
You can go back on our YouTube page and watch that interview. It was a really good interview, and it just tickles me when the student becomes the master, and Deanna has become the master.
Hoag is one of my mentors. So just briefly, I got introduced to Market Profile in 2013 when I went to a Chicago apprenticeship. It was It was a little bit basic though. And, I started using the value area, but I didn't really use the auction process to its full potential. At that point, I was already a swing trader who used institutional order flow on large time frames. So I already knew how to look for large buyers and sellers. And I was pretty successful with that for about 5 years, which is why I thought, hey, let's go into prop trading. I can do this. And boy, I had a humbling experience at first. And then, I kind of managed to match what they taught us with what I already knew, but it wasn't really until I got to Hoag's market profile lab that I really started using the auction process to its full potential, because it's a very, very powerful lens, as Hoag likes to say. It kind of prevents you from doing stupid things. I see a lot of people who try and read order flow, but they start from things like footprint and bookmap and the dome, which is fine if you know your orientation levels. But if you don't, it's very difficult. It takes a long time to actually figure out what is a good level and what isn't a good level. So this is why we've done a lot of research on the high probability levels, on market profile levels, on average daily range levels, and we use it in a whole bunch of ways. So it makes things a lot easier, which is why we can read the market very systematically and methodically. You don't want to bumble around. You want something that you can repeat day in, day out. You don't want setups that only come once every once in a blue moon.
Full moon, like it was last night.
Exactly. Yeah. So you want something that happens very frequently, something that you can rely on, and that means having several orientation points throughout the day, which is why we can do this.
And if we're getting near one of your orientation points in crude oil, please let us know. I'm just kind of keeping an eye on this trade in the S&Ps. But if you notice something in crude oil that interests you, please let us know.
Yeah, well,
we'll take it.
Oh, yeah, absolutely. But for now, we wait. Again, I don't really like trading during the industrial balance. I've been burned many times on crude oil because it's very, most days it will be very directionless. It won't have a clear direction. And I'm not a scalper. I'm somebody who likes to take a good chunk of the market every single day. So rather than taking a few ticks here and there, I wait. And then once my opportunity comes, I take anywhere from 50 to 100 ticks per trade. And, that
Very
suits
nice.
me a lot better.
Those are tasty profits.
Yeah.
Now, I just took a profit in this because we're getting near last week's low. We've got a kind of a consolidation area here that might prove to be kind of a demand area as people look at demand, right? Would you say that there might be a possibility here?
Let's have a look. So let me just kind of jump through a few things.
While you're jumping, I just wanted to say that the crude just tagged at 200 SMA, and it looked like I'm going to see if I could test that 200 SMA again. Also, Chicago PMI coming out at 44.1. The forecast was 47.6. The prior was 48.7. In about a dozen minutes, we're going to have our Michigan consumer sentiment coming up here.
Yeah, that one can be a little bit of a jumpy one because
Right
people
here.
are like, it's not that important. But actually, in my experience, it has quite a lot of effect on the market. And coupled with the end of the month, we could be in for a bit of a wild ride. I don't really see much demand here on larger time frames, Hoag, on ES.
Mm-hmm.
In fact, if anything, I see that the area where we're selling off from is the area that we had at the beginning of the week when a whole bunch of sellers came in.
Sure.
Yeah, what's that? That was what day was that?
John, you got a stop order still in
Up
there?
around the
Yeah, it was
70s.
a Tuesday. So from Tuesday, we're tagging the supply of a whole bunch of sellers there.
All right. Thank you.
But we'll see. We do have the view up from the London session because I like to look at the whole thing.
That was in my head too. And when I put this trade on, I said,
Yeah.
you know what? I'm only taking this because I feel like there's going to be some overnight inventory adjustment.
Yeah.
I took about, 8 points on it, and it's come off where I got out. So I'm going to be happy with that, and we're going to look for our next opportunity as the day goes on. I'm going to move back
Absolutely.
to crude oil on the charts here now. Can you see the charts that we're looking at, Deeyana?
Yeah.
Okay.
I've got you on the. Hold on. Let me see. I don't see your
Rendezvous.
screen actually. That's on Rendezvous. I just see you guys.
Here, Deanna, I'll send you a link so that you can see.
Okay, thanks.
And then if you want to share a chart at some point, Deeyana, we can do that as well.
Oh, okay. I didn't really prepare my charts for sharing because I've got my white charts because with the lights and stuff, I can see them better because, I'm not old. None of us are old.
Okay,
so the black charts are a little bit difficult for me to see, and I kind of don't want to wear my reading glasses because I'm vain.
I've been that way, but my eyes are getting so old, I have to wear the glasses now.
Yeah, I think at some point I'm going to have to as well.
And it lets me like kind of shrink down the printing a little bit that I look at on all my notes and everything. So I get a little bit more information on each piece of paper. So now I'm saving trees by wearing my glasses.
Oh, that's good. Well, I'm not saving trees. I actually just got a new phone, and because we're not old, I've got a massive Samsung Fold 5.
Oh my goodness, yes.
I mean,
it's not a phone, it's a TV.
It's a laptop, really. It does fold into a really nice little phone, but when I need to do something, this is much better for me. So yeah.
So that's where you're like writing your notes and all that. You're fully digitalized.
Yes.
All right, Deeyana, your link is in the rendezvous.
Okay, hold on. Let me. I see. Okay.
I'm still stuck on pencil and paper and pen and paper and.
Sometimes I do that as well because there's a mind to muscle connection when you're writing stuff down. Mm-hmm. But for the charts and stuff, at this point, I like to put everything on the screen. However, up until very recently, I was printing out my intraday hypos because I like to create the hypothesis before I get involved so that, I'm not doing impulsive trading.
And we're going to talk about that as we get further on in the session today. It's so important to do that.
Yeah, it's very important. It just prevents you from doing stupid things or chasing. Chasing is the worst thing you can possibly do. It's like, it's moving, I must get in. Is it at your level? And when it's at your level, then we can have a look. Because up until that point, it can go either way. So that's at least how I like to look at the markets.
In full disclosure, Deeyana, I still do stupid things.
I think we all have Muppety moments every so often. I don't think that anybody can really eliminate that fully, but we can minimize them. As long as your, silly moments don't wreak havoc on your P&L all the time, every so often we can afford to, do something stupid and then notice on time and then
something
get back on
silly. Yes.
You just have to keep your stupid things cheap.
Exactly. Yeah. So don't spend too much money on stupid things. And that goes for any life purchases too.
Oh my goodness.
Okay, what is this? A stupid contest?
No, it's not a stupid contest. We're not being stupid here. Jeez.
I've won a few of those. No doubt about it.
Right, so I've got a couple of levels that I'm looking at in crude oil, if we can get to them. One of them is 1992. That's where my average daily range exhaustion point is. But because it is a responsive day, we might start pulling back upwards before then. However, I would at least like it to tag 91 before I do anything with it, at least. Because then if it comes back into the initial balance after the next sort of 6-7 minutes, then that will signal a potential for a failed auction. And crude oil loves its failed auctions. Now, again, it is the end of the month. So sometimes you can have these moves that just keep going. So we have to keep in mind that could be a possibility. If you don't see any reaction around sort of 91 to 1992, so just below that round number, then we might be looking at a unidirectional day downwards. So basically a jump off a cliff for the end of the month.
There's a lot of profit taking that could come into play here today, couldn't it?
Yeah, exactly. Because we have gone up quite a lot.
Mm-hmm. Now, I found it interesting yesterday that this gap from here to here, we got into it yesterday, but we couldn't finish it. We couldn't close it. So sometimes what doesn't happen can be equally as important as what does.
Absolutely. Yeah. If you have an unfinished structure, that can happen at some point. It's very difficult to say when if it doesn't happen immediately. But, something like single print fades and stuff, I actually noticed that a lot of the single prints on the day act as a stopping point. And when they go, they go. But usually, that's not that high probability. There's a higher chance that single prints are going to create yet another move in the same direction. So effectively, like a resistance or support, depends on what side they're happening.
What do you think about this? The recent high is in the overnight session.
The overnight session in crude oil, to me, it's kind of like 50-50. If we have a quieter day, it can be a very good area to go against that level. But when we have a pretty strong initial balance move, it's a bit difficult to get all the way back up there. So let me just see what we're working with.
Do you remember these charts, Deeyana?
Oh, yes. I remember those. Oh, yeah.
Opening range, the dead ass high in crude.
Yeah. Well, these charts, the reason why I have a technology team now is because I was really annoyed that you had the whole profile away from the candlestick charts, because I like to look at the candlestick charts. It's a very, very easy way to see whether the move was sustained or not. And every time you had to have it in a completely different window. So I felt like always scanning. So what I've done with the technology team is to actually create something that overlays the actual profile on top of the candlestick charts, and I've been much happier.
I'm gonna need that, and you're kind of bragging a little bit. You have a tech team.
Well, I mean, I've been at this for 15 years, and, we can't just do trading, right? We have to do something with all that cash. So for me, it was to create tools that I needed, and then subsequently other people found it pretty interesting as well. Now, I personally like to keep my charting separate from my trading platforms, just to prevent fat finger mistakes, because I've had a few of those as well. And if you don't know what a fat finger mistake is, for those of you listening, it's when you enter a trade by accident and you don't notice on time because you're dragging levels, you're clicking buttons and stuff, and then you're like, oh, I'm in a trade. Oh no.
And what's the best thing to do when you do that?
Oh, just exit. Just exit. Kill it. Like immediately just kill it.
Scream.
How many times have I been burned by being the accidental trader? Hey, how did I get in that? Well, let's see what happens. Yeah. No.
One day I left, because you have a nuclear button to close all the orders, to clear all the orders. I think a lot of the platforms now will remove all the OCO orders that you have, but back in the day you didn't really have OCO unless you specifically connected the orders. And I remember one day I closed down the platform, went home, came back the next day, and I was like minus 13K down because the stop loss order was left on the dome, and I was like,
ouch.
Oh.
No. So that was pretty painful. Yeah.
Oh, no.
And again, I took it on the chin. I took it on the chin, and by the end of the day, I was actually back to scratch. But it was not a good day. I was just fighting a whole bunch of negative emotions. You don't want to do that.
No.
We got 2 minutes here on our Michigan consumer sentiment. So I'll get you the numbers in a deuce.
And after that, Deeyana, I would love to chat with you about the importance of putting forth hypotheses into the trading day and having a strategy for each different hypothesis.
Yes. Now that's the difficult part.
Yeah.
Good stuff.
Eddie's got the sound effects going pretty good for us today.
Yeah,
good stuff, Eddie.
Open.
He's always been good with the sound effects, even when it was just a radio show.
It makes life a lot better.
It does. Absolutely.
I left my stop in when I got out of that trade, and 15 people in the chat. People on Topstep were like, hey, your stop's still in. Hey, your stop's still in. See how easy it is just to leave an order in?
Exactly. Yeah. If you don't press the nuclear button, clear all, it's You forget about it. You forget
And I
about
have a
it.
tendency to click it like 8 times. Pull all and cancel, pull all and
Oh,
cancel,
yes.
pull all and cancel, pull all and cancel, pull
I
all
do.
and cancel.
I do that as
CYA,
well.
man. CYA, cover your butt.
So here we are. Well, I guess, just because I did not want to marry that position, turns out it was a pretty good exit on that short.
Well, we'll see. Again, initial balance, very jumpy.
Yes.
It's very, very rare to have like an initial balance that, like in crude oil, that just goes in one direction. Usually it sort of goes in one direction, then goes back up, then goes back down. So this is another reasons why I really don't like to get involved in it. It's so much easier when you get the initial balance extension. You get an idea where the other time frame participants are stepping in. And to me, it's always difficult trading inside the initial balance. Everything seems strenuous and not quite
Right.
going the right way.
Consumer
no-
coming out at
there's no-
68.1, expectation 67.7. So 68.1, Michigan consumer sentiment.
Thanks, Eddie.
You're welcome,
Michigan
John.
Center. Yes. All right. Well, we'll see what the markets have to digest this with, what was I saying? What did I say? Shit. I lost it. Deanna, I'm getting old.
Oh, no.
Oh, the initial balance.
Yeah.
I like it. When I first started trading the profiles, I started as a scalper, just a market maker. I was working the bid, selling the offer, working the bid, selling the offer, acting like an HFT or an algo does now.
Yeah.
And it just wasn't working for me. So that's when I got the book and I started reading about the profiles, and trade locations were much easier. Cheap trade locations were much easier to find, I found, after the initial balance, because there's a reference to where the auction is comfortable in the first hour of trade.
Exactly. And whether the auction was sustained or not, and how quickly it went there or how quickly it failed as well. Very important. I do have an average daily range high level on ES at 43.74.
43.74.
Yeah. So they might want to poke there, and then it depends what it does around there. It either might be a short or we're going to break through. So it depends how
Well, the
we
Nasdaq
stop that level.
What was your crude level again, Deanna? 90?
My crude, well, it was 91, so we need to get to the round number first. We're just about at the edge of the initial balance low now, so we haven't poked below it yet. So 91 is the round number that I want to use as my orientation point. And usually when you have a relatively large-ish initial balance, which is, 170 ticks, it's pretty large. I like to try and fade it. But again, end of the month, we need to be a bit careful with that strategy. I've seen many end of the months where they just go
and just won't stop.
Yeah, it just keeps going. And if that happens, you don't want to fight that. And this is why it's important to have a stop loss or an exit area if you're using mental stops. If it doesn't, it just kind of shoots through. And actually, this goes for any trade that you do. If you enter a trade and it immediately goes against you, just get out because you're wrong.
Right. Yeah, you don't want to fight directional markets ever. I mean, that's like rule number one. If the market's going one way, you're not going to pick the bottom or the top.
Yeah.
Right.
Yeah. Exactly.
So the Nasdaq's taken out the high of the opening range. S&Ps have not yet done so. But yeah, the Nasdaq had a good rip to the upside above the opening range. We're still watching to see if we get to this 91 big fat round number for Deanna here in crude oil. You see,
almost there.
Almost.
It's getting there.
Almost. Not yet. Not yet.
Wait for it.
Patience.
Wait for it.
Wait for it. So this overnight inventory adjustment turned into a nice little profitable trade. I'm glad I didn't marry it. That was one hypothesis today for me Deeyana, was if the opening range is left at the high of the day, see if you can't catch an inventory adjustment and don't marry it. And it worked.
Yeah, it absolutely worked. Yeah. You're very good at catching the smaller. I know you say that scalping didn't work for you, but you're much better at catching those than I ever was. Even after so many years, I'm still not that great of a scalper. Yesterday, I did do, I suppose, my version of a scalp on ES while I was on my live stream. Sort of towards the end of the session. I noticed that, it was kind of struggling a bit. So I was like, okay, let's do a short. And I only managed to get like 0.5 R compared to the stop size that I like to use in ES, which is pretty sizable. I don't skimp on my stop losses. I usually use anyway.
What is your stop?
30 to 35 ticks would be my stop usually.
So almost 10 points then.
Yeah.
Okay.
Which is why I can catch more, obviously.
Right.
So, yeah,
Right.
I don't really like using smaller stops. It's never really worked for me. And I think it's because of the time duration that I'm looking for from the trade. I'm not looking for a 5-minute trade. I'm looking for a trade that will last 30 minutes up to 90 minutes.
Yeah, this little scalp I was in for almost 25 minutes.
Well, here goes crude.
Yeah.
All right, let's see here.
Take a look.
So we get into the decision area. Now, I also have the average daily range low at 90, 92, 94.
90, 92, 90, 94.
Yeah.
Okay.
But as a strategy, I would like to see it back into the initial balance before I do anything with it.
Okay. That I'm down with.
And alternatively, if that doesn't happen and they kind of continue, then it's going to have to be low time frame and then fishing for wherever the sellers are on the dome. That's where
How do you do that?
starts.
How do you do
So you can usually, it's exactly the same concept as looking at a supply and demand on large time frames. It's just that it's so quick. So you effectively identify areas of large limit orders waiting, and that effectively becomes your area of interest for any kind of shorter term levels that don't necessarily have an obvious level on a candlestick chart.
So-
because it's like so short term, you can kind of do that, but it obviously takes a long time to get there before you can confidently do that. And obviously you have to identify the right day to do that, because you're not going to be doing that every day. And in fact, if you look at the
only on directional days?
Exactly. Yeah. If you look at the statistics on how often you have ranging days, trending days, ranging days are like 56% of the time. And that's like looking at ES, GC, and CL. So 3 instruments that I've actually looked at, and you literally have a lot of ranging days. And then you have gold that does trend a bit more often than the rest of them. It trends about 40% of the time, compared to crude oil and ES that trend about 30 to 35%. So if you're constantly looking for trending days, that's actually going to be a lower odds occurrence. So that's where the strategy comes in. So if you're constantly looking for momentum trades, 56% of the days, you're not going to get them. So you're not going to be a very good trader.
Right. And that's what the profile's for, is to get that lens so you can understand the context of the market that you're actually trading and trade to that strategy.
Yeah, absolutely.
So here's crude oil. Now, this is, I just want to check with you. In a directional market, I have a tendency to be really bad at getting into a market that's already directional, but I've had some success looking at volume profile and trading up against low volume nodes as potential resistance.
Yeah.
So that's kind of what you're talking about. You get a little bit of a consolidation.
A push, yeah. Push in the opposite direction, and then you basically just look for that short-term area of interest where you can get in on the trade.
And it keeps it cheap.
Yeah. Because you're going in on a pullback. You're not going in on a breakout. You're going in on a pullback. So as long as you can identify those areas of pullback on those micro time frames, that will be it. But obviously that's very difficult to do, especially if you're a more novice trader. I would say anybody who's only had like a year or two of trading, I wouldn't even go there yet. Because, Hoag, you were talking about market making and stuff. I was also taught how to do market making in my first prop trading job. I hated it. It was horrible.
It was terrible.
Yeah. And I kind of did okay, but I just felt so stressed out. And I'm like, there must be a better way to do this. Like, I prefer my swing trading. But in the end, I sort of found a middle ground where I'm still an intraday trader, but I'm more of a, let's say, lower frequency intraday trader. I will never do like 15 trades on the day. Even if I'm trading 4 things, I might do up to 6 trades, but on most days it will be between 1 to 3 trades. And that's really all you need. Like, you don't need a million trades to make money. In fact, less is more in this line of work.
Agreed.
Hey, Deeyana,
that's really been...
I got a question for you.
Mm-hmm.
Now, being the crude trader, now, we've got a number coming out today, and this question has been asked before here in the YouTube channel. Baker Hughes oil rig count. How much do you watch that since you are trading crude?
Honestly, when it comes to the numbers, I'm very technical. Maybe if there's something happening that really affects the supply or the demand of crude oil permanently for any extended length of time, I might look at it. But in my experience, every time I tried to use macros on the same day, it didn't work well because the way the markets work, the large institutional traders, especially with the crude oil trading, there's a lot of hedgers, institutional hedgers, right? And what they're doing, they just want an area of deep liquidity. So they can't really kick off an order in the middle of nowhere. They need those areas of deep liquidity before they're going to get involved. And that's not going to happen on the same day. Typically, in my experience, the macros take anywhere from like a whole 24 hours up to a week to show up as moves on the actual chart. So for me, I still rely on my levels and I still use them as orientation points. And it's been like really, really easy for me. But whenever I try to do like, right, macro, let's go. And I just get it really wrong because I have that bias, directional bias from the release that is usually wrong because that is not the area where they want to buy or sell. So it has to be somewhere where there is a deep liquidity pool. And you're not going to find that in macros on the day. So that's my take on it. And, I have been trading crude oil since 2013. So I have seen, a lot of days and I've tried a lot of strategies and I've only stuck with the things that have worked for me consistently. And that has not been to look at the number and then go. And in fact, any kind of a release initially for about half an hour, it's just a whipsaw. Like there's not much direction. Back in the day, maybe like 2014 when we had the crude oil crisis, that was pretty cool because there was just only one direction. You would wake up and short crude oil. That was it.
I got another question for you. EIA. Now, I tell you, I used to trade crude also when I was doing Squawk. A number would come out. It would be a build. Okay, that means we've got more than we bargained for. So
technically it should be a short,
and the price would go down. But I mean, I've seen it where it's a build, the price and the market rallies. It's a draw in the market breaks. Why is that? Do you have any basis behind that or any ideas?
I think on the day of the release, a lot of it will be down to the focus of what's happening elsewhere in the economy. And then depending on how all of that plays into whatever's going on elsewhere, like interest rates, geopolitical risks and all of that, the market participants may look at that as a positive or a negative, but it has not much to do with the actual number. Again, it brings me back to looking for technical areas of supply and demand before you get involved. So you might have a directional bias based on the release, but just don't go plowing into it as soon as it gets out because it's always going to be at least 15 minutes of up and down. Like I think it's been many years since I've actually seen the crude oil inventories come out and just shoot in one direction. In fact, like, has that ever happened? I think maybe I've seen like 3 days. The rest of them, it's all like shoots up, shoots down, then comes back to where it began. And it's like, you don't want to get involved in that. And typically I will leave it for about 15 minutes. At least 15 minutes before I even look for setup. Maybe if it's like something super obvious and we're already at my level. And maybe if it does because crude oil loves its failed auctions around that time of the day. So maybe if it already goes into a failed auction, I might get involved. But other than that, I just sit and wait. Like, I don't like getting shaken out of the market because I wasn't patient enough to wait until the dust settles.
Dust settles, right? Yeah, let the noise chill. Yeah, that's the best thing to do too.
Yeah.
So, cool. Thank you, Dean. Thank you, Deanna. Hey, if you like what's going on today, folks, hit like, smash that subscribe button, hit the like button, hit the lucky like, as John likes to call it. It is Friday.
Like button is lucky.
The lucky like button. We got 769 people watching us. You stalkers.
Market stalkers.
There you go. Branding.
Well, brand it. Let's. It was a segue. I'm handing the ball off to you.
Yeah,
So what was your YouTube site again?
Market stalkers. Yeah.
Market
Stalking the
stalkers.
markets. Yeah.
All right. Market stalkers. Check it out.
I'm totally with you on trading less is more. Had dinner with Jim Dalton, and I think he was testing me, and because I brought the book, I had him sign it, and he says, so, if you're using Market Profile, how many legitimate, real opportunities do you see in a given market in a given day? And I answered 3, 4, maybe 5. And he said, all right, I agree with that. I mean, he was kind of testing to see what kind of traders we were seeking here at Topstep. And I think he thought we were trying to find scalpers, which was never what we were looking for.
No. Topstep was never about scalping. And in fact, every time I was doing like my long trades, you guys were always like, yeah, that was great.
Mm-hmm.
And, and then every time I had like a grasshopper day, I call, like, whenever you try and scalp out of any kind of, strategy, I call that the grasshoppering, because you're like hopping from trade to trade and you don't really know what you're doing and you just get lost. But yeah, every time I was doing that, Hoag would come. We had this like chat because Hoag was our risk manager back then, and he would be like, "Are you okay?"
Yeah. What are you doing?
No. I'm not. And then you go like, "Go, run, get out."
Yeah, get some of that out.
Yeah,
and then go
just
back.
don't do it on the P&L. Just go.
And you were talking about the macro information about crude oil, about anything. It always seems that when there's a miss as far as a release is concerned, markets always seem to knee jerk in the wrong direction, the opposite direction.
Yep.
And I think my dad used to say, if there was a release coming out in the grains and everybody was confident that it was going to be bullish grains, all the speculators were already long. The release would come out, and it would come out, fundamentally looking to higher pricing, but everybody that was available to buy it was already in the market. They stood around looking at each other, and then, bam, the market would tank. The big traders would scoop all that up, and then before you knew it, that day or the day after, the market was screaming back to the upside. So difficult to trade economic numbers.
Yeah,
I've held positions into so many of them, and I've been killed, and I've had great days. And adding them all up, it comes to about 0. So much like you, I don't play.
The biggest one where I lost a lot of cash was FOMC, and I wasn't necessarily wrong on the trade that I wanted to do, but there was nobody to take my order, and I just got stuck in a trade that I couldn't get out of. So I kind of always look at people who are like, yeah, there's a way to trade the FOMC levels. It's like, yeah, levels, but levels are not worth anything if you can't get out of your trade.
Yeah,
so that's why I don't trade it. Like, I can see the levels, that's not the problem, but you trade in the real life markets with any sort of size, you're going to have trouble exiting, because the way the clearing houses work, they prioritize small orders. So if you have a larger order, you're going to be there clicking buttons and trying to get out forever. So just caution to anyone trying to trade super high risk releases. What's coming to you when you get to trading with size?
Yeah, the liquidity becomes an issue at that point, doesn't it?
Yeah, and no one thinks about that when they're trading like 1 or 2 contracts. Even like 4 and 5 is not really that big a deal, especially on ES.
Right.
But yeah, you get over like sort of 50, 60 contracts, which is what happens in prop trading firms. And it gets tough. Like I was just desperate. I was like, I can't. Like you're looking at it, you don't know what to do with it because you're clicking, it's not exiting,
Right.
and you're like, yeah.
What is going on? What is going on? Just take a look at the dome in the Nasdaq. I mean, if you were to hit a 50 lot, you'd move price at least 1 point, maybe
it's in
2
market.
points
Yeah,
to get out.
Mm-hmm.
So you got to keep an eye on that liquidity, especially during economic releases, because you'll see the Nasdaq, the bid and offer will be 3 points, 4 points apart.
Yeah.
And that's just you're not trading in a liquid market. It's just crazy. If you do succeed, if you do get a good trade, it's probably more luck than anything else.
Yeah,
Exactly. I agree.
It's a really good point. I mean, what you're putting on the table here regarding that. And as you can see here, listen up to this conversation, folks. I mean, this is really hitting home. This is like our trading gospel, and it's good stuff. It's great stuff. Appreciate that.
Well, the student has become the master. You guys got to listen.
That's because of you, Hoag.
It's like an episode of Star Wars.
I don't know. I don't know how much you watch. I don't know whether you follow me. I know Hoag follows me on Twitter, but I don't know how much you actually follow the posts and stuff. I actually posted a meme of Luke and Darth Vader, and basically the whole thing is they're hugging. You know the scene when they're together at the end of I think it's Empire Strikes Back, and then the meme was that one of them says one beer, and then it cuts to 4 a.m. and them kind of like stumbling and falling.
Luke, join the Dark Force.
We're actually on the bright side over here because this is the futures prop trading. We've obviously had some trouble with Forex prop firms, which is not the first time. I've been warning people away from Forex prop firms for a long time. But, until something like that happens, nobody wants to listen.
Oops, no, right?
Like,
yeah,
nobody wants to listen. I've heard that my whole life.
Yeah, because they have to experience it for themselves. I can say, hey, CFDs are dodgy and illegal in the States. And they're like, we don't care. We're still going to go. Mm-hmm. Okay, great. And then a firm blows up and everybody comes and cries in the DMs. Oh, you warned us. It's like, yes, I warned you.
Yes.
Yes.
So it's not my fault. I didn't do it.
Yeah, I didn't do anything. Yeah, exactly.
So we were talking about hypotheses, and I wanted to mention and talk about how important they are. How do you kind of put your hypotheses together?
Yeah. So I start from the larger time frames and then work downwards. Every day I look at the daily chart and even the weekly chart. I just want to know what's happening from the bird's eye view. So I want to see where we are chart location wise, and then I start looking downwards. Once I know whether I'm in the middle of a swing, whether I'm at the top of the swing, whether we're coming into a previous area of buying or selling, that's then the time to start zooming in. And then I do the same thing for the 4-hour chart. But with a 4-hour chart, you have to be careful with the overnight activity because sometimes that can look like they've consolidated, and actually it's just lack of activity. It doesn't mean much in certain markets. Obviously, it means more in markets that also move for London and for Asia than it does in markets that are completely dead overnight. So again, as soon as you start getting down to that day time frame, things start to change. The rules get a lot more complex. Mm-hmm. And then once I've done that, I turn to the profile. So I look at the open sentiment. Are we opening above value? How far? Because sometimes you have a reprice event that is not the same as a misprice event. So 2 very different things, and yet they can look the same. They can look like the market is outside of value with a big gap up or gap down. Mm-hmm. But again, two different conditions. If you have ES that's opening like 2% away from the value area, that's not a mispriced opportunity. That means something's happened in the underlying markets that has forced it to reprice.
That's a
and
repricing.
For the most part, they're not getting back down to the old prices. Okay. But if you have something that is sort of within the day's range and it's opening outside of value, like today, ES, it's still going down back to that value area.
Mhm.
So it's I don't know, you're probably keeping an eye on it. So it is doing what my research says that it was going to do. So 0.5 DR, fixed daily range open, and then back towards value. So that's completely the day within the mispriced opportunity where you can basically find a move back to value already during the initial balance. So once I know the open sentiment, I will then actually wait until the initial balance is over. So I'm not typically don't trade during the initial balance unless it's like a very, very rare occasion. And then I will look at the initial balance extensions. So that's the first thing where I want to see whether the auction is succeeding or failing and where is doing that. So if you have an outside value edge being touched with the initial balance extension, I will then either look for value acceptance, depending on how far we were from value, or for the value reversal.
Right.
And then whether that's going to end up as, a failed auction or maybe a sustained auction that happens later on, that's a whole different thing. But basically right there, you have two hypos. You have reversal at value edge or value acceptance.
Or acceptance.
Those would be like a couple of hypos. And that's very clear cut. There's no like, I don't know, either or. No, if it falls back in and if it spends time in there, that's value acceptance.
Right.
Don't try and go against it. If it fails, it's fine. But for the most part, what happens with value acceptance is it will be, it falls into the value and then runs out of steam. Or if it's going to happen, it vastly overshoots through the value area. So it never really ends exactly at the opposite side of value. And then the third setup for me would be if we're opening somewhere in the area of potential breakout on a larger time frame. So for example, if the market is turning around and it's teasing the other side, I will look to get into sustained auction to the opposite side because we're rejecting the higher time frame sellers or buyers.
Right.
So that's another setup. So we have value acceptance, we have some kind of failed auction, and then obviously we have sustained auction. And then later on in the day, if the initial balance is extended long enough or far enough, I may look for the next area of interest, like similar to what crude oil is doing now. But, I would want the initial balance to be extended quite a bit. I would look for a fade back to the initial balance. Maybe not all the way. Again, it depends, how long we extend it. And at the moment, crude oil is probably, if it does go back up, it's probably going to look like a hybrid between a failed auction and auction fade. Because it does have 44 ticks or 50 ticks below initial balance at the moment. Yeah, but it's still like within my area of interest. We haven't actually sliced through it. We haven't gone completely through it. So I'm still waiting.
Are you looking possibly at these points control down here for
possibly, yeah. If we fall a little bit further and if we ignore the average daily ranges that we have around this area, that would be my next area of interest.
Okay.
And again, if that doesn't work, then obviously next week I might look to trade towards the next round number, which is 90. And then we're going to see what happens on the day at that point. But for today, everything is still open. Like I've still got all of my setups. No levels have been smacked through. So we're actually just teasing it.
It's a very calm day here. Gold taking a dive here, just coming back to yesterday's 1870, 860. But hey, real quick here, we've got our hot streak. And we're going to be putting, there it is.
There it is.
Our XFA hot streak.
And quick note on this, Eddie.
Yes.
I apologize to Samvadana in advance. I had to take one T out of your name because of the field length, so I apologize. But there are two T's in that name.
Just the facts, ma'am. Just the
Thank
center
you.
line. Cicero lean. 50K with 12 days, taking the lead today. 3,746. James Z, 100K account, 10 consecutive winning days. Check this out. 21,305. That's some big cash. Henona, that's a new name up on the board. 50K, 9 days. Way to go. 2,701. Bartosz, 9 days. Another new name. 1,081. And Somvatana, minus the T, 150K account, 9 winning days, 2,498. Good job, folks.
Some
Nice
real
going.
grinders there. I mean, just putting up winning days. I mean, to me, that's the big days are always impressive. You're gonna hit a home run if you keep swinging at the ball, but it's the grinders that are working their way through building the account over time, buying time to get better at what they're doing. I just love to see those long winning streaks. No matter how much money there is, you're heading the right direction. It's like, this is so difficult, and for people to get to the point where they're even capable of maintaining and building an account for a long time, that is a degree of success that many people never really get to. And it just I've been at Topstep for a long time. I've talked to a lot of traders. It's very important to me that we are doing all we can to try and help traders. And when I see traders doing well, it makes me very happy, especially on a Friday.
I'm happy.
Very happy.
I'm happy. You got it.
Oh yeah.
Hey, let's bring in Dan. Dan, our crew guy. Let's see what Deeyana and Dan, the D&D. We're not talking Dungeons and Dragons.
Double D's.
Double D, yo, hey. All right, let's bring in, we'll be right back. We're going to bring in Danny. We'll be right back. And we're back, and look at who we've got here. Danny. It's
good morning,
John, Deeyana, and Dan. Hey, Dan, happy Friday.
Same to you guys. Deeyana, you don't look like Michael. I think that's a good
thing. No, but I did say that you can call me Michael for today.
No, we'll call you Deeyana.
Okay.
We need
I get enough of him.
How about Dee Nix?
There we go.
My stage name. That's right.
There you go. What do you stand
guys talked
for,
a lot about crude. I gotta say, I heard no levels have been blown through. I don't know. That 91.50 has been a very pivotal level for me. I've been a big fan of it, and absolutely blasted through that one here this morning. I liked it yesterday. We broke down right to 91.50. Hoag, we talked about that, I think, on Wednesday, maybe.
You were short yesterday. Did you take a nice profit on that trade?
It's been one of those weeks. I had to work hard to only lose $240 yesterday.
Oh man, I
was short, but I was short that there was that initial pop where we popped right back up to 93.21, and I was short right around 72s, 92.72. So a little bit more heat than I wanted to take. So I ended up taking one off on a break. Locked in a little bit of profit, stayed in on a couple more contracts, and it popped. I didn't like it. Then by the time it moved up to our 30-minute 20 period moving average, I was like, you know what? I don't know if we're going to rally back to settlement price here. We're making a good push up to settlement price. We had decent volume coming in on that push up. So decided to stay out.
I mean, you've managed the risk very well on that. That was what, 4 contracts you were on?
3.
Was it 3? I don't remember.
Yeah, because I went to put a 4th on, and for some reason my contract size rejected me. I had to call my risk manager and tell him to give me some more size.
I hate it when that happens.
Don't you hate it? So this morning, I came in this morning. I had a late night. I was on uncle duty while my sister and her husband went to the
I saw that on Instagram. Cute kids.
Yeah, I had to babysit my sister's kids while they went to the Packers game up in Green Bay. So I didn't get home until.
By the way, they lost.
Yeah, it's great. Go Bears, go. So I didn't get home till 1. So I was not in a rush to get on the markets this morning. So then it started breaking. So right now I am looking over on our daily chart. We do have that 20 period moving average, a little bit below $90, but for me, that's where I'm starting to look. We're starting to fall into last week's range, which is what I like to see. I'm a range guy. I like when the markets kind of fall into a little bit of a range for me. So that's kind of what I'm paying attention to, but it's Friday, so it's a patient day for me. There we go, Hoag. Hoag, you muted yourself.
Sorry, my dog was barking.
He gave me a heart attack over there.
And I always forget about that. I apologize. So no trades today. Deanna's been very patient, waiting as well.
It's hard to jump in on these breaks, isn't it?
Well, for me, this wouldn't be a break yet. In fact, I'm looking at longing somewhere around here now on crude. Because
I would definitely call a $2 move a solid break for me when it comes to crude. For me,
yeah. See, for me, it's about the ranges. You mentioned ranges. Well, I have a similar thing.
Okay.
When it's hanging around the daily and average session ranges, that's my level of interest. Actually, one of the highest probability things that I do. Yesterday, I actually did. Hold on, let me just kick that off. Just give you a second. Yesterday I was on the live stream and I was actually long crude and I caught about 70 ticks on that.
Oh, so you caught the move that took me out.
I caught the move. Yeah.
I was short that.
Yeah, you see? Yeah. So I mean we all have good days, bad days, I don't read the market that well every single day. But yeah, okay. Is that good?
I mean, yesterday that was a good place. That was prior week swing high. So we had a swing high in there right at 47s, give or take. So a good area to look for a nice little bounce. No doubt about it.
Exactly. Yeah. I mean, I just know that crude oil really loves the failed auctions around that time of the day. And I just play probabilities. I'm a big data person and I just rely on data. So, yeah.
I'm a trust the gut, read the tape, see what's happening, and find my channels. Find my channel. See, Hoag, that's what we were looking at yesterday there, that had to close that gap.
Yes.
And we closed it. That's what we looked for yesterday. Wasn't happening. Now here we go.
Right. Yep.
All right, so I'm long crude now. So let's see what happens.
Where are you long from? 91?
I'm 91. Yeah, 91.01. I wanted to go in slightly below that, but I was talking, so I missed it.
Don't you hate that when that happened?
Yeah.
Damn talking, always getting in.
It's the live streaming, man. It's like, yeah, so the crude oil that I did yesterday is actually on my live stream from yesterday. So, yeah, if somebody wants to check that out, you're very welcome.
Where is your risk?
I'm 90.66 is where my stop is. So again, 35 ticks. I don't use small stop losses. I always go for 30 to 35 ticks. That's like my default stop loss size.
I'm about the exact same when it comes to day trading. So I keep it pretty. I think that's pretty reasonable based off of average ranges when it comes to crude oil over the last few months. Like
that's exactly what I do. I base my stop losses on average ranges. Yeah,
we have to. If we get to a point where it was like, what was it, a couple of years ago where we were averaging like 60 to 80 cent moves ranges? Okay, I got to tighten up my stops a little bit. But we're seeing $2 here today, $2.50 here today. It's been a relatively consistent to see this market moving $1 to $1 more or more than $1 on a daily basis. So it's okay to open up that risk as long as you're not trading in the dead center of a range.
Yeah, I hate trading in the middle of the range.
Well, let's hope it plays out for you. It's a Friday for me. I'm sitting on my hands. I got too much excitement for the weekend ahead.
What are you doing?
It's
not
Friday.
a damn thing. I got an Oktoberfest party tomorrow. It's my birthday coming up. So, birthday celebration this weekend.
Well, happy birthday.
Happy birthday.
And then off to Chicago. Say again?
Hey, baby.
Said happy birthday.
Oh, thank you. Thank you.
Hoag, wasn't it your birthday at the beginning of the month or something?
September 9th.
That's right. Yeah.
Wow,
I know Hoag's birthday.
See, you got quite the memory.
And your daughter was born on the same day, from what I remember as well.
Yes, she was. Wow. You remember.
It's my party trick, you see.
Unbelievable. Fantastic.
Well, I'm going to let you guys get back to it. The crude, we'll keep an eye on this 91 level. I think interesting location. Hopefully, I'm not in, so Deanna, hopefully we get a little rally here back towards settlement price for you.
Yeah, we'll see.
Danny, have a great weekend. Happy birthday, brother.
Thanks, you. Same to you guys. Birthday. Have a great weekend.
See you in Chicago.
Hey, guys. I have a quick announcement as well.
Sure.
We're giving the last 10 combines away of that giveaway. So we'll do 5 now. I just posted a Google Doc. Fill it out once. You know who you are, people that filled it out 24 times today. Can't slip one by old Jackie. We'll choose 5 now. We'll do another form a little bit later. Whoever's closest to the random number between 1 and 1,000. We'll give away 5 and then another 5, and I'll announce them at the end of the stream today after a mixed shoulder tap, which will be around 10:50 or something.
Awesome. And what are they getting?
We are giving away 5 50K combines with this form, and then 5 more later for
5 more later
10.
on. All right, cool. All right. How about some likes for the free stuff?
How about some likes? Lucky likes. We got almost 800 people and only almost 300 likes. Come on.
And we're not doing this again for a long time, by the way. This is a this week thing.
Okay. Hey,
so this is it for the free trading combines, I guess, huh?
For the time being.
We got some other stuff. We got some other stuff up our sleeves.
We're going to give away socks.
Socks and 8x10 autographed pictures of Michael Patak. Yes. Hey, Johnny, John Jones is asking, when figuring the gap, is the time different for indices versus gold versus oil?
Yes, because they actually have different trading floors beginning and ending times. So like a gap in crude, the regular trading hours in crude is in central time, 8 a.m. to 1:30 p.m. So when you end your day, that's the extremes of that day time frame. So any moves outside of it overnight create a regular trading hour session gap. So you got to know the regular trading hours of the products that you're trading. So the equities, it's 8:30 a.m. till 3 p.m. The cash market closes at 3 p.m. So that's where I end my trading day and end my charts at that time. So anything that trades outside of that, the following morning would be considered a gap. Equities, again, 8:30 to 3. Crude oil, natural gas, I'm pretty sure 8 o'clock to 1:30. Gold actually used to open at 7:20, but most charts won't let you do that. So we go 7:30 to 12:30. That was an early close for those guys in New York. They had a lot of time to get into trouble after that. So again, gold 7:30 should be 7:20, but 7:30 to 8 to 12:30 is regular trading hours. And then treasuries and currencies would also start at 7:20. Most charts won't let you do that. So 7:30 till 2 p.m., all in central time.
All right. Another question from Mindy. Any good resources to learn more about volume profiles and ATRs?
I would say with the volume profile, I always kind of look at it as a kind of a simplified market profile. So I would actually really advise you to learn the entire market profile rather than just kind of learning volume profile. What do you reckon, Hoag?
I think that the volume profile misses a whole lot of detail that you're going to get in the market profiles. So definitely, if you're gonna learn one, learn them both. And Deanna, you have some good information about that on your website, don't you?
Yeah, I have an educational website. So, I teach all of that, but I start you first on the supply and demand on large timeframes before we move on to the market profile. And obviously my method is pretty heavy on the average ranges in various ways. I use average session ranges. I use the fixed range. I use the daily range. And, I'm pretty sure that actually one of my major strongest probabilities is the average session low at a particular time of day, especially for things like equities. They like to reverse towards the end of the day. Actually, when the former open outcry bond markets used to close, you used to get bond traders moving into the equities markets. And this is why even to this day, you still have this like push in the final hour in ES. That's why. And if you can locate the average session range or even an average daily range, if it hasn't been broken by then, you would actually be looking at a really good trade location for a reversal trade into the end of the market. So, check out Market Stalkers. So this is exactly what we do. So, yeah.
So, right. So a lot of those turnarounds in the equities just happen right at 2 o'clock to 2:30 to 3 o'clock.
Yeah.
Just like the other day when we put in that low, and it happened actually early. I was waiting for 2 o'clock to come around to start looking for an opportunity for a long, but it happened early.
Sometimes it happens early. It's not an exact science. Sometimes the levels will get reached before or after you're expecting them to. But just having that slight time zone when you want to look for your setups, it massively helps to stay away from any impulsivity. Because if you just sit and stare at the markets for like 8 hours a day, at some point you will get tired. So just having those windows where you want to look for your setups, that's massively helpful.
Here's another question here. What's the key difference between volume and market profile?
Hoag, you want to take that?
Sure. Yeah. Here, I'm going to just take a profile and show you. Here's the S&P profile for today. Going to make this really big. So this is volume. This is market profile. Market profile is based on price over time. So the price is always going to be the variable, time is the constant. Each of these little blocks represents a period of time. In this case, it's 30 minutes. The first 30 minute, 8:30 to 9 o'clock, is A period, and that's the range. B period, 9 o'clock to 9:30, and that's the range. C period, 9:30 to 10 o'clock, and this so far is the range for that period of time. But when you push everything over to the left, you begin to build, you start to build bell curves. So by looking at this profile that the vast majority of price of time where price has maintained is between these two levels. So there's a lot of nuances that occur in time that you don't see in volume. The volume profile, which is right here, is quite simply the amount of contracts that traded at each price. So this is the variable, again, is price. The constant is volume, but the volume is, of course, always changing, but we have to kind of keep price as the variable, volume as the constant, right? Because it is each price is number of contracts traded. So the thing that I like about the market profile much more than the volume profile is the fact that you get areas where the market didn't spend a lot of time. You also see that it didn't spend a lot of volume there also, but there are kind of secrets in the market profile. I don't call them secrets. I would call them nuances.
Insights.
Pardon?
Insights.
Yes. Yeah. Insights, nuances, different things that you're going to see because it's based in time over volume. that you're not going to see in volume over time. That's one way to kind of put it. And, it's difficult to really kind of get your head wrapped around how the market profile works until you really get an understanding of the construction of the market profile graphic, what it's telling you. There's the value area, which is where 70% of the time, 70% of the time of price that the time spent in those two levels. So you get excess at the low, you may get excess at the high, you get weak lows, weak highs, you get point of control migration, you get all these different things that you're not going to get from volume profile, you're going to get in market profile. Dan, actually, you have 3 books out too? Do you talk about market profile in your book?
Yeah, second book is all about market profile. So that's actually synonymous with level 2 on the Market Stalkers method as well. So I go pretty deep into it. There are parts of the profile that I found I didn't need, purely because I do have this other analysis that I focus on from the larger timeframes and then the average ranges as well. But when it comes to the auction process, when it comes to the open sentiment, I use that very, very heavily as well. So I know that there are purists, market profile purists out there. I'm not a purist. I use whatever helps my trading. So that's one difference. But the way I like to look at the market profile is that you have the distribution curve, which is the value area. So that's part 1. And then you have the initial balance, which again gives you more structure. That would be part 2. And then you have the nuances, structure that happens outside of all of those areas. And that would be part 3. So if you can kind of marry all of that together, you're going to get a pretty awesome way of looking at current events if you can stay objective enough, because it's not based on a bias. It's not like I think it's going to go that way. You can have an assumption of where it's going to go, and then you can look whether the market profile is going to confirm that or whether it's going to invalidate your idea. And to my knowledge, that's the only strategy or concept that can let you do that. And that's why I like it. I think that's why you like it, Hoag, as well.
Yes, you're an artist.
Yeah.
I started my life as an artist. I think visual learners, artists, that you have to be creative in order to accept information that the profile is saying to you that may be contrary to what you are thinking, and especially what everybody else is saying.
So, for example, let me give you an example. So I got a really crappy entry just a minute ago because I was talking, and I decided I didn't like that. So I actually cut that trade, and now I'm looking to get involved again, but only if the market profile again starts to reject to the upside, if the price lifts from wherever we are now. But my level is still there. I'm actually looking at another demand area from a 4-hour chart. So I'm still looking for that long. I'm not interested in going short here. Maybe if we get a pullback somewhere higher, I might short it. But for me, this is a buy area. I want to be a buyer here. So I am going to try again. I only took like a 20-tick hit there.
Okay.
So yeah, so I am still looking for the same thing, but because of my entry, I was talking, chatting, I got an entry literally like 15 ticks away from where I wanted to. So now I want to look for the entry where I actually wanted to do. So this is taking in the information and saying, yeah, okay, that wasn't the best, but is my level still there? Like, what is actually happening? And if the answer to that is yes, you can take yourself through a number of conditions to see what is happening. Is the demand broken? No. Are we creating massively lower lows? No. What's the time of day? Time of day is very important as well, because usually most of the moves are typically done by this time of day. And you either get a slowdown in price, and that carries on for another couple of hours, and then you get another push. So I work off of like day trading time zones in many ways. So if you can find that objectivity, and if you can take yourself through the same types of questions, what is the profile doing? What is the initial balance? What does it look like? Where are we? Are levels being broken? Do we have lower lows? Do we have higher highs, like whatever you might be looking at? And it's very malleable to whatever you're doing at the moment. That's another thing that's so great about profile. Mm-hmm. It's not like you throw out the baby with the bathwater. You take what's already worked for you, and you just add an awesome lens into the market sentiment.
Right. what you're talking about, I mean, going through that checklist, is this still there? Is this still there? I call it stacking the nuances. Sometimes the nuances that the profile provides stack so heavily towards one side. And if that breaks, you have to be creative enough to say, okay, that's no longer viable. Wait for the next opportunity.
There's contingency plans. So that's another very good way to look at things. Rather than come into the market, that's where hypos can also help you. So rather than going, I just want to be long, that's great, but have contingency plans for where you want to go short as well. So for me, for example, looking at this, if I were to go short, if we get there, I would be probably looking at 91.80 area, because there's some selling going on from there, and some pause that had happened before they continued. So that would be my area where I might want to get involved in a short.
Okay.
Hey, John, can you put the 30-minute on there so we can see that?
Yeah, of course. I got her 4-minute and 4 hour.
I'm actually on it's a 5-minute chart actually, but you can see it's on a 15 and 30-minute chart. I do use lower time frames too. Like I like to jump through the time frames.
Uh-huh.
So yeah, if you see any kind of buying and selling wicks, that's usually price activity where you want to investigate on lower time frames. So if you go down, let me get you the chart thingy. Yeah, so if you go all the way up to around 92, so all of that, because on a 5-minute chart you're going to get a lot of noise. So
Right.
around 92, we do have the value low, we do have that supply, and we do have a few other things happening. So, and again, the volume is not super stacked there as well. So that would be my area, like that whole sort of 20 to 30 tick range. Because remember, I need a 30 to 35 tick stop. So
Sure.
there's no point in me looking at 5 tick ranges. That does nothing for me. But all of my zones, every key level is always a zone for me. And it's 20 to 40 ticks wide. So if I can get an event, something's happening there, I'm good. Like for example, now we are consolidating still.
Yes, right here.
So, we're still there.
Yep.
So we'll see.
Right.
I'll let you know when I go into another trade.
Hey,
Yeah,
we've got right now, if I can, let's bring Jack. You ready? Let's do it. Average winners, losers, and the total. We've got a graphic coming up here right now, and there it is. There it is. All funded last week. We have an average winning trade of $290, average losing trade of $158. That is a 1.6 to 1 win-loss ratio.
It's a 1.8. That is my typo there. It should correct, but we won't wait on it. 1.8 to 1.
1.8. There's a win-loss ratio.
1.8 to 1. Okay.
8 to 1.
1.8 to 1. Nice.
Funny. There you go. Thanks, Jack.
I just love to see average winning trade close to or greater than 2 to 1 over risk.
Right. And now we've got our top 5 funded P&Ls. Rocciado. 40,000. Nice job. XFA 40,569. Johnny O. I think Jonathan O. I think I've seen that name before. 39,195.
Nice.
Kwong, I know I've seen that name before. XFA 26,903. Timmy G with the 17,745. And live trader Ivani with 15,304. Playing the pro ball. That is our top 5 funded P&L. Great job, folks.
Very nice.
Yeah.
Love seeing that. Love seeing people succeeding at this. As I know you do, Deanna, because you've worked so hard at putting together a program to help people to be more successful at this. And
There is nothing better than when somebody comes to you as a losing trader, and after about a couple months, they turn the corner. It's amazing to see that.
It's
so
wonderful.
For me, it was one of those things where a lot of people were asking me questions. This is how the method came about. Because I obviously figured out some stuff very early on, as you know. matching things that maybe other people have never matched together as strategies. And then whenever some people would walk by my screen, I would always be in some kind of a profit. So inevitably you start getting questions. Hey, how did you do? By the way, I entered another trade. So that was 90.75. So yeah, how did you do this trade? Why did you do this trade? How did you find that? Blah, blah, blah. And then eventually it became so much that I had like 12 people around my desk asking me questions, and I'm like lecturing them instead of doing my own trading. And then it started seeping into my private life, because I was talking to people through, back then we had Skype, we didn't really have like chat rooms and stuff. And we were like, I was always getting messages. And at one point it got so much that I had to repeat the same thing that I was telling to all 12 people separately. Because one guy would be like, hey, what do you think about this? Hey, what do you think about this? Hey, did you get into a trade? Hey, and like over and over, I had to repeat one and the same thing. So I decided to start putting like little videos on this little website. And initially, I just thought those 12 guys are going to be interested. But then at one point, I was like, why do I have a website? Why don't I put it on YouTube? Just to explain it. And then that video went to like 30,000 views in a week. It was crazy.
Oh,
I was just like, what? That's embarrassing. Yeah, and that's how it started. And after the YouTube video, I started getting a lot of messages from random people going, hey, where can I learn this? Where did you learn this? Do you have a book? Do you have a program? And I didn't have anything at that point. And then eventually I decided that rather than me explaining it over and over to one person at a time, it would just be easier to create a course. But I'll tell you, creating a course is the most difficult thing that I've ever done. You have to put your thoughts into a very structured way. And I wasn't going to release something that is like just randomly talking for 4 hours. I wanted it very structured. I'm a musician, right? So I know how you level up in music, and you don't level up just by randomly trading. You have to have a plan. So that's what I did with the program. Every single lecture pushes your skills to a new level seamlessly as you go through the program. And I know that I learn like that the best. I actually learned through a Kolb experiential learning cycle. So what is that? You first learn about an abstract concept, then you go to the live markets to look for it. For example, crude oil assumption is that the average range area and the demand on a 4-hour chart is going to bring us a move back to the initial balance. Okay, so that's the idea, right? And then you observe. So once you get experiential data about an abstract concept, then you've got enough experience to try a trade for yourself. And then you see how many times it works, because we are in a game of probabilities. Not every trade will work out, right? And if you get really kind of bummed out when one trade doesn't work out and you decide to throw away everything because one time the trade didn't work, it's maybe trading is not the best choice for somebody like that. But probabilities, do 50 trades on the basis of the same idea.
Right. See
what sort of probabilities you get. This is also the reason why we can't, whack in 100% on everything, because nothing is ever, 100%. It's always going to be a probability. Even if a strategy has a 70% chance, you will still get 30% where it won't work. So once you start moving away from any single trade outcome and into probabilities, everything becomes much easier. Because suddenly it's not, oh my God, no, what am I doing? Losing trades. It's like, oh, okay, so this day belongs to the 30% outcome, whereas all the other days when I did the same type of trade from the same type of level, that belongs to the 70%. So that's how you use data in trading, not just like randomly sitting there clicking buttons and turning up. That's never going to work.
Right.
Or it is going to work, but it's going to take you a very long time to get that experiential data.
That data you're talking about, if you're not accounting to it and keeping track of all of that, I mean, I guess you can get it, but it's going to take a long time. It's going to have to become intuition instead of actual hard numbers, right?
But intuition is a lot easier to obtain by first looking at the hard numbers. So I don't know how many people will agree with me on this, but if the intuition is coming from nowhere, is it really valid, especially in trading? Like if you think something's going to go somewhere, but you have no reference points, that means nothing, right? But if we have levels and we go, okay, well, I feel that it's going to go from, the daily range exhaustion back up. That's based on data. Again, you have a level that you're looking at, and you want the price to do something. So it's not random. Whereas if you just sit there, you don't know levels, you just look at the candlestick charts with the order flow, and you just go, I'm just going to go in because I think I can feel it.
Right.
It's, to me, I don't know. I'm not very comfortable trading like that. I need data, I need probabilities, and I need to make sure that whatever I'm doing is matching that rather than getting all up in my own head.
Okay.
It's
real quick here.
go ahead.
I was asking Deeyana, do you have some videos to suggest about psychology or mindset? Now, I'm going to post her YouTube link once again here, and check that out because. And do you got a different website also?
Yeah, so we actually have about 3 different websites. So one of them is more like marketstalkers.co.uk, where it's almost like a shell, and then we have the coaching platform where you have like nice ways to track where you are in the lectures and stuff. So that's marketstalkers.thinkific.com. It's a course platform, and it's really good for our purpose.
I see it. Okay.
You can see your member profile. It remembers where you were, how many lectures you did, how deep into the lecture, and then you have some exercises as well, depending on what membership level you are at. But yeah, so as a part of the whole Market Stalkers program, we obviously address psychology, and I think I've got about 4 different lectures where I talk about it. Specifically about psychology. The thing about psychology, I think people turn to psychological problems way too quickly, even before they have any sort of a solid methodology. They start sorting out their psychology. It's like, that's completely pointless to me because you don't know what your issues are going to be. Once you get the proper levels and the proper strategies, then we can have a look at your psychology problems. But before you have that, looking at psychology is completely pointless. It's like, oh yeah, I'm not going to lose much money. But at the same time, I have no idea what a good trade location is. It's like, great, let's work on the trade locations first.
It makes sense.
Maybe all the confidence issues that you're experiencing might go away once we know what a good trading location looks like. But, that's my take on it.
Right. All right. I posted the link, Market Stalkers, thinkfic.com.
Thinkific.com.
Think.
It's a Canadian.
There's the link.
Actually.
The link is there.
Yeah, the link is there. Yeah, just copy it.
Just copy it, and there you go.
I like to tease Deeyana and call her an underachiever, but the amount of information that she has out there, the quality of the education is just excellent. And she does all of this while wrangling 8 dogs.
You got 8 puppies?
Wrangling is the right word. Yeah, I've got 8 dogs. Yeah.
Fur babies?
They're not puppies anymore. So we had 6 puppies that we were blessed with, and we have the 2 parents. So yeah, now we're a crazy dog house of 8 dogs. So we have a Pomeranian, she's the mom. We have a King Charles Cavalier, and then we have their kids, 6 Cavapoms. They're going to be 2 years old end of November. So I can't believe it's already 2 years. Oh my God.
So they're coming into the terrible 2s.
Oh no, they come into the terrible 2s already. Yesterday I had to take one of the females. She's gotten really reactive out of nowhere. I don't know why. So now I have to separate her out, and I've been taking her to a private field in Surrey. So yesterday we went there, and it was great. But and there's like agility stuff, and I was trying to get her to do agility. Wasn't that successful. But the thing with her is that she just barks at everything. So I got her onto the field. There's nobody there. Like there's like one farmhouse. There's nowhere for her to go. She was barking at the equipment.
They do that, right, Hoag?
Yeah. And then she stopped. And I was like, okay, are you done now? Got it out of your system? And she was like, yes. So yeah, I'm going to keep doing that. Yeah, so I'm going to keep doing that until she's not reactive anymore, and then slowly increase the distractions. But the rest of them are pretty good. They like chasing their ball. They're absolutely nuts. They chase each other in the park. They scream and everything. Like it's really funny. One of them likes to bark with a ball in his mouth. It's like, woo, 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 woo. It's hilarious. So they're a
Don't
lot of
waste any
fun.
time.
Yeah.
Patricia Hull says she has 17 dogs.
Oh my goodness.
Oh,
Goodness, wow, that's a lot.
yeah, that's a lot of dogs.
You are a dog lover, Patricia. I love dogs. I love pets.
So
Any
are they
pets.
all her dogs? Like, now I want to know the story behind that.
There's this thing called neuter.
Well, no, we intentionally wanted puppies. Maybe not 6 all at once. I always wanted to have loads of dogs, though.
You'll always be safe, though. I tell you, intruders will not have a chance
No.
with that many dogs.
Or
If one doesn't hear it, the other one will. If
I
that
know,
one doesn't hear it,
the mom starts barking and they all kick off. It's I actually have a sign on my door now because they don't react as much to a doorbell, but somebody knocks and it's like all
madhouse.
hell breaks loose. Yeah. But the sign actually says, "Don't knock. There's no need to get the dogs involved."
I was just trying to get Lacey up here to say hello to everybody, but she's a little camera shy today, I guess. You gonna try again? Come on. No.
No.
Yeah.
She's like, "You have no treats. No treats."
No treat.
Yeah,
Oh, yeah.
that's
My
the
God, no
problem,
dog
right?
treats.
Yeah.
My dogs are in the living room watching TV. They do it every morning. I get up, I let them out.
SpongeBob.
Get 'em- Actually, it's the History Channel. They tend to like. I'm not kidding. I mean, I'll give them a treat. They'll go go in the living room. I'll turn the TV on, keep them busy because I'm working here most of the day, and Michelle she works from home also. So it's we really don't have time for them, so we put that TV on for them. But they haven't complained.
How many
when they
you got, Eddie?
two rescue dogs, little 20-pounders, cuddle dogs. Yeah, they're mutts, and I love a good mutt. But I've had one for 15 years and the other one for 10, so they're getting up in age.
Yeah, the reason why we ended up with so many puppies is because we lost our rescue dog, and he was 15 when he died, and he was a Carapom, and I just loved him so much. So we now have a house full of Carapoms. So yeah.
Yes, I think once you dial in with the dog that you really like, mine's a terrier, and the other one's a Boston Chihuahua mix, which is sort of crazy. The dog's a nut. But that's the kind of dog I like now. I used to have a larger dog, but I like these smaller dogs. It's easier cleanup in the backyard, if you know what I mean.
Yeah, definitely. Yeah. we actually have somebody who comes and helps us with the decorating and stuff, and he's got a Rottweiler. So every time he comes over, he's like, "Oh, let me clean up in the garden," and I'm like, "Oh, please don't." And he's like, "No, it's my pleasure compared to my Rottweiler."
Oh, goodness,
Okay.
Yar.
All right, so crude
Beautiful
oil is
dogs.
attempting.
You got you're in it.
I'm in it. Yeah.
Nice.
I got in at 75.
Very nice.
I don't think I'm going to look for more than about 91.27 here. So if we can get there, I'll be happy. 91.24 will be okay with me as well.
Got it. I was looking for that test to that point of control down below, but what doesn't happen can be as important as what does.
Correct.
There's a guy saying he's got 5 Great Pyrenees here. By weight, that's like probably 25 of your dogs.
Probably, yeah. One of my dogs is quite big. Actually, a couple of them are much bigger than what they should be. Because the parents are tiny. They're like, what's Bond? She's about, what's that in pounds? She's about 15 pounds, and the dad is like maybe about 22. Well, we've got Bernard, who's about 30 pounds, which is, he's quite big. He's more like a small Labrador, really, than a Cavapon.
Oh. Real quick here, what time frame are you on, Deeyana? 4 minute?
So I was actually looking at the 5 minute time frame for the consolidation and the reversal. Okay. Yeah, but now I am actually up on the 15-minute chart, and I'm just waiting to see what the 15-minute close is going to look like.
Okay. Oh, Patricia,
and it looks like a consolidation and a reversal, so we'll see if that holds for another minute and a half.
Patricia comes back. She's got 7 Jack Russells. Those are like dogs that have springs in their legs.
Yeah,
boing, 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 boing. 2 collies, 3 Malinois, and a Doberman.
Wow, those are police dogs. Those are good dogs.
They're very intelligent, but super high energy.
Yes.
UPS probably hates delivering to your house, Patricia.
We thought Lacey was part Malinois because our trainer kind of told us that she was a rescue, but she's really smart, very athletic, but still hasn't figured out how to jump a 4-foot fence. Thank God.
Oh yeah, only 4 foot.
Yeah,
I think one of mine, little doggy. He's so springy. He's our smallest dog. He would jump like anything. It's ridiculous. He climbs. He has this way of jumping, and then he sort of clambers up the fence. So, but I mean, my fences here are really tall. They're about like 7 foot. Otherwise, he would go squirrel, and it's like
At least you almost caught one yesterday in the yard.
My other rescue dog, the one that we lost, he was terrible at catching squirrels. Like he only one time he caught one, and then the squirrel turned around and bit him by the chest, so he let it go. And I was like, that's useless.
Lacey's caught a few rabbits, a few squirrels.
Oh no!
So fast. She's so fast. No. I know. It's like, please, don't.
We got a bunny in our backyard, and Michelle feeds it. I mean, we had that strawberry patch, and she's like, she had it all fenced out, so no squirrels or anything. And she's like, well, you know what? I'm going to open it up for the bunny. I'm like, oh, that's nice. You're opening up shop for a bunny, but the squirrels you won't.
Well, as soon as that bunny gets nice and fat, bring it over here. Lacey will eat it.
Yeah, no. Exactly. Nice lunch. Yum.
Its name is Charles.
Ooh.
Charles.
That's a posh name. Charles.
Posh.
Yes.
Charles the bunny. Chuck the bunny.
So, what do you think of that 15-minute close?
I think it's a pretty good push.
Not a big shadow on top.
It's usually a good sign, but you never know.
Yeah. It's probabilities, right, Dean?
It's the probabilities. Every trade can fail. And again, depends on how you're looking at the market as well. Like sometimes if I haven't slept enough, or if I'm, not feeling that great, or somebody annoyed me for some reason, sometimes you come at your trading desk and you're a bit angry and frustrated. You're probably not going to be reading the market that well. And that can have an influence on the probability as well. So it's not the setup, it might be you. But then on some other times, it might be the setup failing. So there has to be a difference between those two conditions.
Markets change people change markets. Once you get the right answer, the market's going to change the questions. If you're mad at the dog, think twice. There's so much to think about, right?
Do some meditation, yoga nidra. That's a pretty good practice. Yeah. Don't be angry trading the markets. You don't want to do that.
Happy traders are better traders.
Yeah. It's funny. I was doing this test of this like an AI avatar thing. I was just messing around with it, and what they made you do is like to read out a script, and to make you look quite positive and upbeat. The script was actually saying, "I feel really positive today, and I am smiling with my lips partly open." So it's like, I should get this for the traders. It's like they're pissed off coming at the screens. It's like, I'm feeling great today. It's like almost like a form of positive brainwashing.
Yeah, Well, they've been pissed off enough. They may punch it though.
That's true.
This is a happy thing. What? Get away from me.
Yeah, exactly. I can't be happy right now. Smash.
That was one thing my dad always said. Anger isn't going to help anything. It only hurts you.
True. Very true. Yeah. Great wisdom.
Forgiveness
Hey, John?
is not for them. It's for you.
Johnny,
Yes, sir.
can we take a look at gold here? Gold's making some lows right now.
Yeah.
What levels do you have? You showing anything, any support, anything that we can be watching for this downside?
No, look at this.
No, I don't have anything on gold either. It's just down, down, down.
Just open space down here.
Yeah. Yeah.
It's
This could be
just
like a
open
liquidity
space.
gap. It could be a liquidity gap. And when that happens, you don't want to stand in the way of that. It's just like either go with it and pray,
Yeah.
or stay out. Yeah.
Yeah. I'm this breakout here was pretty good, but the
Let's see if it
information,
does
the volume, the open interest hasn't been all that impressive. I wasn't that impressed by this breakout to the downside, but sometimes selling begets more selling. Maybe we're starting to see some more significant, longer time frame sellers come into this market. Let me take
And it's also the end of the month. So this is what I was talking about at the beginning of the session. When you have like these moves that just go, well, gold is doing that. Just don't touch it.
No.
If you touch it, go with it. Don't go against it. Because it's like, if you like being hit by a train, then go for it. But I wouldn't.
Yes.
Yeah.
No. Don't try and jump in front of this. That's for sure.
Yeah, you don't want to do that.
All aboard.
Nope, not going to happen.
So, we've been talking about the auction process to the downside. Again, hasn't been all that tremendous as far as volume and open interest is concerned, but we're one time framing lower. We took out yesterday's low. I was going to point out that the delta is positive. We're on the lows and delta is positive, but it's positive 1,300 contracts only. But think about the volume in gold. So with positive delta, price moving lower, we may see today an increase in longer time frame inventory adjustment. In other words, there may be longer time frame sellers in this market just scooping up what the short time frame market order buyers will give them, and they move the offers lower. If Monday morning we have a large increase in open interest, then that would make this theory true, and it can, the longer time frame can vacate the building at any time. But if the longer time frame remains, just placing offers and replacing offers and calm ice orders, we may see a continuation, a late spike to the downside at the end of the day as our short time frame longs have to get out before the close. This is we were talking 3 weeks, 4 weeks, Eddie, about a big opportunity coming from gold when we broke through this area, and it certainly has continued. But again, it hasn't been that impressive, but nothing I want to fight. That's for damn sure.
No, especially with that. I mean, there's nothing below it. I mean,
space,
the
final frontier.
That's what we were talking about when we're talking about the bird's eye view and the big time frames, larger time frames. Even if you're an intraday trader, you need to be aware of where the whole price is, chart location wise. And we did have this formation on the monthly chart called the drop base drop, and I identified the base part like last month, but obviously because it's such a large time frame, it takes a while for it to come true.
Sure.
But now we have the drop base drop printed on the monthly chart, and it looks like it's here to stay as well, because it's Friday, end of the month, there's nowhere to go. And that's usually the sign of more downside. And really, I mean, there's a little bit of an area, maybe about 100 and 200 ticks lower than this current price, but it doesn't look particularly strong. So if it clears that, we have even more space. So we're effectively now going into a corrective swing. And again, that's another reason why you want to know what is going on those large time frames and know when to go against them, because there's a counter trend that is safe. You know, if it's a slightly mispriced opportunity, like I'm doing on crude oil, to me, that's not a very dangerous trade. But longing gold would be like suicidal. Because of the larger time frame context. So you have to have that narrative, no matter what time frame you want to trade as an intraday trader. Having that narrative really helps.
Hey, Deeyana, Servide has a question for you. With your observation of the long, did you add at any point when it went lower, or
I don't add,
higher?
I exit. So I don't like adding onto the position. If I feel that I didn't get involved into a position where I wanted to, like because I'm talking or whatever, like I do live streaming as well, and this happens to me fairly frequently. So if I see that the market has not really moved off that point, I will kill the existing position, and then I will enter another one when the market presents me another opportunity. I do not add on to positions. It's never worked for me. I think that you're messing with the consistency and the position size when you do that, especially on lower size accounts. Like, for example, if you have a 50K account and you're trading a couple of micros and then you add just one extra micro, that's like 30% of the position extra.
Right.
Is that really something you want to be doing? Probably not. And then if you're trading a mini on, 100K, again, trading a 2 contract position, that's doubling your position. Like, just don't do it. Those accounts are not large enough to begin with when you first start trading them to trade those kind of position sizes. And you see, Dan has been trading for years. He's only trading 3 or 4 contracts, right? There's a reason for that. So think about your position sizes in relation to your allowed risk limits and your profit buffer. Sure, if you've got $500,000 or a couple of million to spare, yeah, knock yourself out, like add all you want, but make sure that it's still within that maximum position size that you need to assign for yourself. And again, you need to have a maximum position size. You can't just, trade a tiny little account and go, well, I'm just going to trade 10 contracts. It's like, good for you. But
do you
you're probably not going to live very long.
Hoop's asking, you stops or just exit?
If I'm wrong, it depends. It also depends on the strength of the setup. So if I'm getting involved in a setup that has a very high probability that I've witnessed like thousands of times before, I would probably let it go to full -1R if I got the good execution price. If I messed it up on the execution price, then I will exit and then try again. Or sometimes if I see that the trade is not really going my way in the next sort of 10-15 minutes, I will just kill it. So wherever it is, I'm not going to wait for it to reach my stop loss. So I'm not like a do or die sort of all or nothing person. I do have early exit conditions that get triggered at certain times.
Right. Nice.
You're getting pretty close to your target now, aren't you?
It is, yeah. So I'm about to take it off.
Nice. Good trade.
Well, we are coming to half past Chicago time. I got 10:26 here Central, and we really enjoyed having Deeyana with us. It was cool. That was honestly the first thing when I got up and turned the coffee machine on. I'm like, yeah, cool. We've got a special guest going to join us. Deeyana's going to be with us, and I watched the interview, and I was like, yeah, and you even mentioned my name, and I got all excited. She's like, oh yeah, Deeyana,
because I remember you were like, it was like a proper radio show. It was a proper radio show, and I was really impressed when because I was a musician, and I did a number of radio shows before, and I didn't really expect it from a trading company to have like such level of presenter. Because Eddie is really cool, guys. I mean, I don't know how many people have been watching you, but I've been listening and watching for a long time, so it was really good to see you today.
That was cool. You made my day. You made my day. Of course. Like I said, I turned the coffee on, and I'm like, yeah, Deeyana, yeah.
I was really happy as well. Well, Anthony emailed me really late. I was actually asleep already, so I got up in the morning and I got the email. I said, hey, you want to join us on Friday? Like, Mike is going away, and I'm like, woo. I was like, yeah, that'd be cool.
All right. Awesome. Likewise. What
we'll
time is
have
it
you
now
here-
right there? I'm sorry. What time is it now? Well, go ahead, John.
Tag, you're it.
Not it. 10, 11, 12.
We'll have you here as often as you like, Deanna. We really appreciate you sticking around and spending this much time with us. It's fantastic. You know, as far as I'm concerned, you can move in and we'll.
I'm coming. I'm moving
We'll hang
in.
out a lot. Bring the dogs. You got a fenced-in yard. You know.
Yeah, bring some friends for Lacey.
There you
Yeah,
go.
she loves dogs. She would just be so happy to have a bunch of dogs around here to play with.
Awesome. Yeah, I'm happy to jump in anytime, guys. So this was really good because it allowed me to kind of take it in my stride. You know, we're looking for setups, we're doing proper analysis, and this is very similar to what I do with my live Thursdays because I do once a week live streaming on my channel as well. But it was good having other people to bounce ideas off because usually it's just me talking. So this was pretty cool. Thanks, guys.
Well, we
Appreciate it.
Appreciate it, Deanna. Thanks again for all the time. I mean, you could stay all day if you want to, but you probably don't want to do that. But
Once again, here is the website, marketstalkers.
she's back.
There you go.
Just
And
to say
just to clarify before you leave, Deanna,
Yeah.
Zacharia's like, Eddie, man, read my question, brother. Okay. So you never add, not on the winning ones, neither ones going against you?
No, so if you add onto the winning trade, I always feel like you get a worst entry, and getting a good trade location that goes your way intraday is hard enough in my eyes. So
Okay.
when I have something in profit, I would rather be all in if I identify the opportunity as a good opportunity based on my data and my experience, and then I just want to let it go. And it's, you know, there's no stress, there's no like, oh my God, it's going to come back. It's just like chill, right? But if I add on to the position, that always means that I've done something wrong. If it's losing, if it's going in a drawdown, and then you add, that means I've either not identified the time that I'm going in correctly, or the level maybe wasn't there yet. And it's always such a slippery slope with adding positions. So I would just say go in or out. Like, just don't add. Maybe once you've been trading for many years and you find that every single trade that you do goes into some drawdown, that might be beneficial then. Like, every trade you do goes into 10 ticks drawdown minimum. Then you might look at adding into a trade as a part of your overall strategy. But adding to trades like willy-nilly, I've always been against it. So I'm either in or I'm out. If I'm wrong on the timing, if I'm wrong on the timing, I just get out and try again. Take a little bit of minus to pay some money for the markets, and then try again. But as long as you have those conditions that are, you know, really there, and then you're like, right, what am I looking at? What is my invalidation point? When do I want to get in? Was this a good execution? And I have a whole thing about the round numbers as well. So you know how I mentioned, it was a round number. But that's part of the strategy. Yeah, algorithms love round numbers. And if you're placing your stops, like let's say you want a long and you're just above the round number, like you're really asking for it, man. Like you're asking for it to just get smashed and then for you to look for another trade. So beware of round numbers around your levels. It will help you a ton.
Thank you. And you did say willy-nilly, right?
Yes, I did.
Just like the commercial. Willy-nilly. All right.
Yes.
Deanna, have a great weekend. And
Right.
like John said, the door's open. You anytime you want to come back again here, we'd love to have you.
Awesome. Thanks for having me.
Give it up for Deanna. Yay. All right. Until we meet again, thank you very much. All right. Yes.
Right.
We've got shoulder tap coming up. Shoulder tap on the shoulder, or a kick in the junk. We're going to find out here in just a few. We're going to take a little break here, huh, John?
Yes, we're going to take.
Okay.
How long do we have, Jack?
Well, what we'll do here is just you guys talk for like 2 minutes while I get mix set up.
Okay.
We'll do shoulder tap, and then I will announce the winners.
Okay. Cool.
Maybe shame some people that did not.
Okay.
Shame on you.
I can see it. This isn't random, man. This is an affront to me.
Okay.
All right. Hey, John, you know what? We were talking before the show started today. Usually on a Friday, we talk about a movie. We forgot to talk about the movie from actually, I think we did Monday a little bit.
Just a little bit.
Trading Places.
Yeah.
Now, for those that have not seen it, maybe we should just sort of extend it another weekend.
Yeah, the homework goes through this weekend again. If you watched it last week, it might be good to watch it again because I know I've watched that movie probably 20 times. It is hilarious.
This time, watch it backwards, and that's for somebody that does not follow rules. Okay, watch it backwards, and you see how they have money, and then before you know it, they're panhandling on the street for spare change. But yeah, it's a very entertaining movie if you have not seen it. And Eddie Murphy is hilarious.
Yes.
Dan Aykroyd, he's Dan Aykroyd. He does the Dan Aykroyd. And you learn sort of a little bit. Not saying that's a very educational movie, but it was one that that Michael, it's sort of piqued his interest and got him into the, wow, people do this? People do this? Wow.
It got him into trading.
Yeah, it got him into trading. James Harden says, I want to watch Dumbledore's movie. Dumbledore. Well, that was Tim Conway did Dorf, right? Where he like the little guy playing golf.
On golf.
Dorf on golf.
Yeah, Tim Conway.
God rest his soul. I tell you, that man was one of my favorite comedians. Loved him. Hemp Chat says, Eddie, what radio station were you on? WTST.
Squawk Radio.
WTST Chicago. No, that would never work. Lose people.
Oh, that was pretty good, Eddie. That's pretty good.
Yeah. So, Johnny, what's your plans this weekend? This is a long 2 minutes.
Just try and get a few things done around the house, which always seems to be kind of a never-ending project. And next week I'm going to be off on Friday. I'm going to Florida for a couple of days. For a few days, actually. I'll be gone from Friday of next week through Wednesday of the following week. Gonna go down to Clearwater Beach for a few days with some friends and get some relaxation. And been taking a little bit of a hiatus from alcohol for a couple of weeks before I go to Florida. And feels pretty good. It's probably been, I don't know, a couple decades since I've gone this long. And I'm, just going to be doing some healthy things. I got a car that I want to sell. I'm going to clean that up and we get that listed probably now, maybe after I come back so that I can be here to sell it. And what else? Got to probably clean up a lot of poop in the backyard before I leave town.
Sounds like fun, John.
Yeah, right.
So real quick, we are ready for Mick, and then after that, I will announce the winners of the combines today.
Awesome.
All right. Well, we're going to take a couple minutes here. We're going to get Mick. Mick's in the green room right now. Intern, bring Mick on, please. And we'll be right back.
Hey, Mick.
Hey, good morning.
There's Mick.
Eddie, Jack in the background. What's up, guys? Happy Friday.
Jack in the background. It sounds like a movie. It'd be a badass movie.
I'm envious of Hoag's background. He's got those purple LED lights. It looks really good back there. I'm not saying I have a bad one myself, but I like that.
It's a little bright in here, but I've got the one where you could change colors.
Oh, do you?
If the batteries still work. There we go. Orange.
Oh.
Get a little vitamin C in the day.
Little orange and blue, some Bears colors.
Oh, the Bears.
Hard to watch.
Well, you know what, Mick? They're going to play a team that hasn't won either. There's Jack. It was Jack. They're going to play the Broncos, who are also 0-3. I wonder what Vegas has the line on. I wonder what it is.
I'm curious. I think I'm going to do a little tailgate viewing party. Bring one of the TVs from the condo down to the pier and watch, because boat's right at the harbor there, next to Soldier Field. So it should be fun. Wow,
that would be cool. And sell, you know what, and get like a bunch of like beer in a can and sell it. Sell like, $3 a can. Have a seat. Seats are $10.
No, I'm probably going to try and get some friends to come deplete what I've got in the cooler before the end of the season. Hoag, I'll see you on Sunday. Eddie, yeah, you can come too. Bring some of your pulled pork. That stuff is killer.
You know what? The wife was talking about that. But she hurt her back band, but she was going to go to Costco and get one of those big pork loins, those long pork loins. That's what we usually do. We cut it in half, and then we slow cook that stuff. Oh, baby. And put the other half in the freezer. But I don't know, we ever get together again, I will make sure that I bring my slow cooker and that pulled pork.
Please do. Speaking of meat, we had a Topstep supper club last night down here in Chicago at a place called Frontier. Fabulous food. Shout out to Frontier. We had some Wagyu beef ribs that were just killer, and a fantastic tomahawk steak. I brought the bone home, gave it to the dog last night. She chewed that thing up out on the balcony. And and speaking of meat, also want to give a shout out to one of my friends, Alex. Alex is one of our contracted developers, helped us out with some of our trading application software, and he has got one of the best marinade recipes. I got permission to kind of share it with the group.
What's it called?
Today. I call it Alex's special sauce. Coke, vinegar, mustard, salt, pepper, any spices that you like. I'm not going to give you the exact measurements for that stuff, but Alex, shout out to you. You've made me a very happy camper as far as my taste buds and stomach.
Now this Coke, is it easy to get, or is it the hard stuff to get?
The Coca-Cola Classic.
Coca-Cola. Oh, okay.
Coca-Cola Classic.
And
I like using the real Coke with the cane sugar as opposed to the high fructose corn syrup.
Yeah, that's always better.
Yeah, much better. Much better. But meat and food aside, it's an exciting Friday today. Got shout outs for our live traders. Hoag, I see you're up a couple bucks in the S&Ps on that one trade, so shout out to you.
Yeah, one trade.
Yep. Just in and out, very selective. Nice job there. We have you bet. We've got some very big players in our live accounts today. You've heard me talk about Hugh, one of our live traders from France, trading in the live markets. He's up 28,000 today, bringing his account balance up over 75,000. So big freaking numbers out of him. He did the other week. He had a $19,000 day, but up 28,000 and some change, close to 29,000. So big shout out to him. Another shout out to Lavani G, one of our traders in a live account. I was writing down on my notes here. He's up $8,000. He's up $9,000. He's up $11,000. He's probably up a little bit more if I turned around. I'm not going to do that, but big shout out to him. Another big account balance. These guys are power players. They're trading very, very well, and excited to know that we here on the risk team called them up to the live markets because they're crushing it.
Nice.
Other notable P&Ls for today: Solo up 14 grand. James T up 5 grand. Monsieur up 7,300. That was another one where his P&L just kept going higher and higher and higher. So he might be up a little bit more. So really good stuff out of the live accounts today and the express funded accounts. All of our funded traders are doing well. We started off this week, a lot of red, a lot of blood on the boards, but Tuesday, Wednesday, Thursday, all profitable days. So really happy for our group of traders this week.
Fantastic.
Hey, Mick, I got a question.
Yeah, lay it on me, Eddie.
Now, Ian has said this before, I do believe. Ian says, I'm on a 16-day positive streak, XFA. Does this give me a feature, Mick?
Good.
Ian.
Ian, I'll have to look at that.
If we're missing that, brother, I'm sorry. We will highlight you like a
16-day streak.
bottle rocket.
16-day
16-day
streak.
positive streak XFA. Ian.
How much is he taken out of the markets in this 16-day streak?
I don't know. Let us know, Ian.
Yeah, tell us, Ian. I think I might need a shoulder tap to look at Ian.
Yeah, right. There you go.
Sometimes the steady, consistent profitability, which is my favorite, it's what I love to see more than anything out of our traders. It can fly under the radar a little bit with how many people we're watching over here.
Right.
So, Ian, I'll check you out as soon as I get off the segment. But thanks for sharing. Appreciate it. Keep up the good work. That's freaking incredible. That's awesome.
Yeah. Yeah.
Even if it's $50 a day, that's a great streak.
Mr. Cooney's going to have him message him directly.
Perfect. Yeah.
Thanks, Robbie. Robbie's
that
it.
guy. So really happy to share those big days today. I do want to feature a couple traders, two of which we transferred from XFA to live this week. Another
Sweet.
one who's still in XFA. So if we could please pull up a card for James. This is someone who got called up this week.
Wow.
James S. out of Connecticut. It kind of speaks for itself here. The stats are great on him. Average daily P&L. I don't think we have the percent winning days on here, but he's on a 7-day streak. He had a losing day before that started, and he was on a 5-day streak before that. So really like what we saw out of him. Not a lot of trading days in his Express funded account before we called him up to live. That's what we liked him that much. So just really good stuff. He keeps his losses small. I have seen that he can overtrade when he starts off down money on the day. This is kind of something you'll probably hear from me. You've already heard it from me, but something you'll hear from me a lot. These traders that we're featuring, they're handpicked by Brett and myself, our other risk manager. We love seeing keeping the losses small. And a common theme, that we will see with all traders, myself included, is you can overtrade a little bit when you're down money. So that's an area of improvement, something to be conscious of. We all need to think about calling a bad day, because a lot of times when we're down money and we start trading more, it means we're taking trades that are not maybe the greatest setups, because psychologically we're thinking about making that money back that we're down. Right. Potentially trading our P&L and not trading what we see in the market. So something to be aware of for all you traders out there. With that, let's kick it over to Hisham's card. Hisham is another trader I really like here.
Nice.
He got called up to a live account this week, and very similar stuff, very similar talking points that I had for James. Hisham is super consistent. 86% winning days. Average daily P&L, it's one of the lower numbers, 351. Consistently hitting singles, base hits. I love the trading. We were so thrilled to call him up to a live account this week. And he's just very, very steady. I will say, though, he's had a couple losing days. He's in a 100K account, so he's got a $2,000 daily loss limit. I have seen him hit the $2,000 daily loss limit on a couple of occasions. With that consistent profitability, this is okay. However, it's an area for improvement. If you're averaging $351 a day, and that's the average of their winning days, their losing days. So it's not an average of what they put up on their average winning days. But to be losing $2,000 a day, those losing days are larger than his biggest winning days. Something to consider there. But overall, knocking it out of the park, hitting base hits 86% of the time. So I really like that. We're happy to pull him up to live.
Hey, Mick.
Yeah.
If you talk to him, he's from Saudi Arabia. Can you ask him if he knows anybody in the crude business that could be a little easy on us this year? My pocket's a little light. So any connections?
I was talking with Dan about it this week. Don't like seeing crude up around the $90 a barrel area. Would love for that to come down. It is boating season's coming to an end. It's sunsetting. So I won't be filling up my 90-gallon gas tank anymore this year, which is good. So got a little time over the winter for those prices to come back to a more favorable.
You got a great looking boat too. That's a handsome looking boat.
Mick, can I bounce a couple of things off you on this card here?
Yeah, definitely.
So the thing that you say, and you and I have had many conversations about this is, keeping the losing days smaller than your average winning day. You get people that are, putting up $500, $600 winning days, and then on their down days, they're losing $2,000. They're hitting their daily loss limit. Think about this, everybody. I mean, as a trader, do you really have any business losing more than you've been capable of making in any given day? Do you really have? Is that right? I mean, does that seem right to you? Do you have a right to do that? You're making 500 a day, you lose $2,000. And then once you start putting up bigger days, then start thinking about your average winning day should possibly be closer to your personal daily loss limit than hitting that daily loss limit. When you think about it, you're capable of putting up $1,000. Don't lose more than that in a day.
Yeah, I echo you 100%, Hoag. You've got no business risking more in a single trading day than you put up on average on your winning days. I like to use the phrase, we need to be taking 2 or 3 steps forward and only 1 step back. We don't want to take 1 step forward and then 3 steps back. Nothing upset me more or made me more upset with myself and my trading than having, 2 good weeks or whatever it is, a couple good winning days, a couple good winning weeks. Fortunately, I never blew a winning month or multiple months in a single trading day, but nothing pissed me off more than, being like, I traded great the last 2 weeks and then one day gave it all back.
Yep.
And I think, if you're doing that, it should sting. I think when it comes to that, though, you're only going to tolerate yourself or allow yourself to do that so many times before it really grinds your gears to the point where you get that discipline and you're like, I'm tired of pissing myself off. I'm not going to do it. I'm not going to replicate this again. And that's what happened for me eventually. But it'll come around. So I'm happy you mentioned that. It's really something traders need to think about.
Yes. I mean, if you're looking for a level for that, think about that. Your average losing day could be a good daily loss limit. What should I do? How about that?
And, speaking of that, I saw Dan, he was down a little bit of money trading crude oil today. He had a fantastic week last week. He's been trading really well. He was short oil today, kind of ran up, had a little pop when he was short down on the lows, but he cut his losses and he's still well ahead. So, that's an example of doing it right. He took 4 steps forward last week, 1 step back this week, and that's what we should be doing. So shout out to Dan for that down day, but you know what? That's going to happen. So nothing wrong there. He's managing his money really well.
Nice. How about this real quick, Jimmy? Hey, boys, I passed my 150K combine today.
All right.
Bravo.
Nice job, Jimmy.
Good
Nice.
job.
Nice. What's Jimmy trading?
Jimmy, are you trading beaver pelts?
I would bet my money he's trading the NASDAQ.
Yeah.
150K?
Good probability of that.
Yeah. Everybody's trading the equities here. I want to see some more grain traders, some more oil traders, nat gas. We don't really have anybody trading the nat gas. Granted, that's been a pretty choppy sideways market for the last 4 months or so. We'll see what happens with it, though.
Yeah.
He's not saying. I don't know.
That's all right. Let's move on. I got one more shout out.
What do you got?
I got a card for Ramez. Ramez is in an express funded account. He's someone we're taking a very close look at because he's been trading very well. Clearwater, Florida. Hoag, I'm envious you're going down to Florida.
Hey, I'll be down there, Ramez. I'll be looking for you.
Look at, they got Kush growing on trees. Nice.
Those are palm
those
trees,
buds.
Eddie. Those are
they're trees. Buds. Sorry, it's Friday.
Yeah, so pretty self-explanatory on the card. I will say, happy to see he's up 4,000 today. He's always putting up big winning days. I think his smallest winning day was 1,700, and everything else I'm seeing on him is 3,000, 4,000, 5,000, 4,000. So doing really, really well. Average daily P&L, 1,365. Remember what I said earlier about this average P&L. It's also including the losing days too. He's in a big account, so on his losing days, he is hitting his $3,000 daily loss limit. But kind of what we were talking about before, his winning days are bigger than his losing days. So if you're putting up days like Rama's, you can afford to risk $3,000 in a day. I will say though, with those $3,000 losing days, he can cut his losses sooner. Just because we let you risk up to $3,000 in a day doesn't mean you have to. You can cut those sooner. And, we would, if you do the math on this, if you could say, I'm going to trim, instead of risking 3,000 in a day, I should only really be risking 2,000, do the math there. And just for example, 5 days, sample size, 5 losing days, if you're shaving 1,000 off what you're willing to risk, that's an extra $5,000 you got in your account.
Lose less, make more.
Yeah. Some people, have a hard time calling a bad day, but we're all going to have bad days. It's part of the biz, and something for him, but not knocking him. He's doing really well, and that's why his card's up here right now.
Nice job.
Beautiful.
Yeah.
Cool.
Well, that's all I got for you today, guys.
All right, Mick, I appreciate you coming on here and sharing this with us, and congratulations to those. And the reason that we're putting this up here, I know that I read earlier today that, you put these numbers up here, it screws with our mindset. You shouldn't be taking it that way. You should be seeing how the opportunity of success is available. All right. If you need help, stick with us here at Topstep. We've got our coaches in Discord. If you are funded and you're having problems, you talk to Mick. You talk to Mick or Brett. But there is a lot, to get you moving forward. I know a lot of traders spin their wheels, not moving anywhere, and it gets very frustrating and stressful. But, we're here to try to help you. And of course, the community. My gosh, this community is just badass best friends that a person can have, honest, and I really love what's going on. So don't be afraid of that, okay? These numbers come up where people are being successful. Make sure that you put yourself on that list. There you go.
Hey guys, how's it going?
Jack.
So yeah, I'm in here in the office today for the last day, hopefully in a while. It's a little bit hectic over here doing it, but it's fun seeing Mick, and James is training so that I can take a day off at some point. But good stuff. So
You deserve it, Jack.
yeah, you do too, Hoag.
More than a day.
As promised, today we gave away 10 combines that actually ended up being 11, counting ties. And also once I DQ'd some folks for, let me explain what I'm talking about here. I took out the names, but
We got cheater pumpkin eaters.
well, consider this your warning. I have hidden some columns here that show who this person is, but these are the kind of submissions we get in a forum where someone goes 2 to 1,000 and gives 20-something entries. So don't do that. We can see it. Anyway, without further ado, I will read off the winners. I can also paste them in there. Either way, you'll get an email. Oh, wait, did you guys see the entries? I forgot to push it live there. Here you go.
Well, real quick here, Ian, breaking news, 14 consecutive winning days. There you go, man. We will get you back up on Monday. All right, what do you got, Jack? Sorry, I just had to do that.
I think I forgot to push this image live, but this is what I'm DQing people for, basically. So, don't do that. You know who you are. Anyway.
That's one person doing all that?
There were several people that did similar things. They did not win. So
you sound like a nun in my grade school. There's a bunch of you boys that are doing similar things. We don't like it.
I was voted most likely to become a nun.
Oh, me or you?
I was. I went to Catholic school. Anyway, I went to Chicago Catholic League school. Anyway, let's do this. How many times can people enter? As said multiple times when I posted it, one time.
Uno.
So the winners are today Tony with an I and a lowercase t. Tony with a capital T also won. If you're the same person, let me know. We got Grish Viasco, Danny Hitchings, One Savage, D-Min SF, Wesley Fallis, Mary Jo Roaring, 4430.
Mary Jo.
I double typed Grish here. He won once, so it is 10. Elevate the Frequency and All About You.
Elevate.
I will post these real quick.
Our buddy. Way to go, freak. Quincy.
1 second. There is a duplicate in here, but oh man, it's so difficult to post things like in a YouTube chat. But here you can see who won right there. Doesn't really matter because there'll be an email going out, but just want to announce that. Congratulations and look forward to talking to you. In the meantime, guys, I think we're about ready to sign off. If you got anything else?
Signing off for the week. Let's all gather and give everybody a big hug for the weekend. I had a fun week, John.
I did too.
Jack, you know what? You're kicking ass behind the scenes, my friend.
100%.
We're trying our best.
My wife about you the other night. How much?
What'd you say?
I was telling my wife about you the other night. How you get everything ready and you're feeding us stuff and you're lining us up. You're like the mom, like before we'd go to church on Sunday, where you're like combing our hair, straightening our clothes, making everything's right, and then say, "Okay, go ahead, go. You look fantastic."
That is the goal. Well, yeah, I think it was great too. We'll have to have Deeyana back for sure.
Oh yeah,
Yeah, it was fun.
That was good stuff.
Yeah. Jack, thanks for everything you do. Thanks for everything everybody does for Topstep TV. And for all of you, I always like to remind you to do something nice for yourself this weekend. We work really hard at this. You deserve it. No matter what the P&L was, do something nice for yourself. And of course, always do something nice for somebody else.
Yeah. Pay it forward. Roy says Eddie's pushing for a free combine. No, I don't push. I shove for a free combine. Jack, give me a free combine. But you know what, John, you're right. You're absolutely right there.
Commenting on my shirt, by the way. I love it. Bring them loud. Get those patterns in.
But yeah, cool. I had a great week today. I think Deeyana had a fun time. I think she did.
Yeah, she did have fun. She had a good trade too. So she had fun. She made a little money. Got to hang out with us. We got to hang out with her. It was a win-win.
It was a win-win-win-win-win for everybody.
FYI, for people asking, those numbers I showed were not the winning numbers. That was an example of someone who entered. I hid the email and YouTube name, but it was an example of someone who entered the form 20 plus times and so did not win. The people that came closest were those that are listed there. So
we have your name in case we ever need it.
Yeah, so no trivia today. We'll be back with trivia next week. But as always, it's been a great week. Hoag, Eddie, you ready to end this?
Yep.
Hold on a second. I got to get my Bogart out here. Okay, I'm ready to call it here.
No, that'll be all. Just be sure to lock the door behind you on your way out. Good night.
Good night. Take care. Have a great weekend. See you, man.